Welcome to the European Market Open. We're a minute to go until the start of cash equity trading. I'm Manus Cranny in Dubai. Your top stories today. High-stakes talks. Officials say Joe Biden has agreed to a summit with Vladimir Putin as long as Russia doesn't invade Ukraine. Markets take the cue. US and European equities climb on the hopes of a meeting, casting aside the forecast from JP Morgan for 9 straight rate hikes from the Fed. Living with COVID, the UK is set to announce the end of restrictions a day after the Queen tests positive. Warm welcome to the show. You don't normally get me, but today it's a special. It's Tom and Manus. Anna will be back on patrol tomorrow. Let's have a look at how we're doing on the equity futures. We have this diplomacy which is driving a de-escalation of political risk, but at the same time it's putting a little bit of a pep in the step of the equity market. Stocks 50 is up 1%, DAX up over 1%. As we have a de-escalation narrative this morning. The cash is open and trading. Let's see how it's looking. Tom Mackenzie's in London. Tom.
Manus, you point out really the geopolitics taking front and centre away from the central banks, arguably, though we will get data out later for the Eurozone that will build out the picture in terms of how we're looking at that important March 10th meeting from the ECB. But it's the geopolitics and it's the prospect of that meeting between Joe Biden and Vladimir Putin. We're still waiting for details on that, on how concrete that will be. But for the moment, it is lifting that mood after the week last week for European equities essentially ended range-bound, and a similar picture stateside as well. Of course, it's President's Day in the US, so markets there are closed, but the futures have been pointing strongly for the Eurozone. And here's what we're getting then as we switch focus to what's happening in the market today. Just in the first few seconds, the FTSE 100 is getting 0.6%. The pointer for the UK equities is going to be Wednesday and testimony from Bailey and whether we got more clarity on what's going to happen in March. Of course, investors pricing in a rate hike, but how aggressively are the BOE prepared to go? They got the CAC Cajon getting 0.8%. The Spanish IBEX also up 0.7% or 58 points. Again, you're going to get Eurozone manufacturing and services data out in the next hour or so that will flesh out the picture in terms of the growth trajectory for the Eurozone. The Italian FTSE is gaining 0.6%. It was JP Morgan that came out with this call that they now see 9 consecutive rate hikes, 25 basis points for the Federal Reserve, bringing you into 2023. Will others get on board with that very aggressive outlook from JP Morgan? Markets now reducing their bets that you're going to get 50 basis points in March. Some of that on the back of some of the commentary that we got from central bank officials, Federal Reserve officials towards the end of last week. Let's switch it on then and see how things are shaping up in terms of that geopolitical risk-on move that we are seeing. We had seen, of course, towards the end of last week, spot gold going above $1,900. It's now below that as some of these risk havens are unwound on the back of this prospective meeting between the two presidents. The futures, you're not going to get cash trading of treasuries today, but the futures are pointing to a bit of a bid for the 10-year. So yields ending below 2% when they closed. And in terms of the futures, when it comes to the US equities, you're looking at gains then after what was a range-bound picture for US equities last week. And again, the yen, which had been a safe haven move, that's coming off a little bit as well. The dollar getting something of a bid. And again, the question mark is, are we going to get anything solid, particularly from the Kremlin, around this meeting? We know the drumbeats around that rhetoric and very strong concerns expressed, particularly about the US and the UK, saying essentially President Putin has already made up his mind when it comes to the question of Ukraine.
Yeah, and if you think about that was the narrative on Friday, and then he left the White House. It's a holiday in the United States. We were so close to an invasion, yet he left. That's a big criticism that has come through. This is incredibly important for Macron, because he's had no wins with Putin, has he? So for him, the broker of a peace deal or the broker of a rapprochement between the two of them is critically important as he goes to the polls, and that's a big one for him. I think you're right, Tom. I think this whole narrative will shift to the Evans move. The Evans language from the Fed is that we need a substantial move, and if the PCE this week comes in hotter and higher than expected, the personal consumption expenditure, that could re-style the narrative around rate hikes. Tom, good to be back with you. Haven't seen you for a while on the telly, so we're going to enjoy the next hour. What have we got? Is it you and me? There's no name, but I'll go anyway. Shall I go? Yes, why not?
Go for it, Manus. Yeah.
Presidents Biden and Putin have agreed in principle, as you say, to this diplomatic summit. So what is it, according to the statements that the White House and France have agreed to? The U.S. officials say it will only happen if Russia doesn't invade Ukraine. Meanwhile, the EU foreign ministers, they're meeting in Brussels today to discuss the latest developments. Moscow has repeatedly denied it plans to attack Ukraine. Let's get to Maria Tadeo. She is our Europe correspondent. She's on the ground for us. Maria, good to see you. So what can we expect from this meeting between Biden and Putin, if and indeed when it happens?
If and indeed when it happens, that is a big question, Manus. At this point, what we do know is that there is an invitation that has been sent out by the French to Vladimir Putin and, of course, President Biden to meet. The point of this meeting, of course, is to talk about security in Europe. Whether or not it happens will depend on Russia not invading Ukraine. That is the only precondition that it's being set out for this meeting. And, of course, we know that on Thursday, the Russian foreign minister and the U.S. Secretary of State will meet to prep this meeting. Now, in terms of what does an invasion look like, that is one of the big questions that I've heard this morning repeatedly from foreign ministers. Some will argue the reports of ceasefire being broken to the tune of 2,000 incidents in Donbass would already constitute or would already be an invasion of Ukraine. Of course, others say that as we're not there yet, and we need to just be very careful and be very cautious before we make those assessments. But what I've noticed and picked up today here in Brussels is that you are seeing tensions between some of those that argue Ukraine is already under attack, and then two, when it comes to sanctions on Russia, this is probably the time to pull them out.
And there's growing talk about preemptive sanctions on Russia as a means of deterrent, really. And this particularly comes from Zelensky. It was in his speech at the Munich Security Conference over the weekend. You know, is that a call to arms, a call to sanction arms on Europe before there's any kind of an invasion, Maria?
Well, look, we just heard from the Ukrainian foreign minister who just walked by a few minutes ago, and he did, again, repeated what is very much the Ukrainian line when it comes to sanctions, which is what good is it if our country is invaded? At this point, it will be too late. At the Munich Security Conference, of course, President Zelensky, who, by the way, got a huge standing ovation from everyone who was present there, he also repeated the same thing. He said at this point, Ukraine is defending Europe. We are, in many ways, a buffer state between Russia and the West, and we need the weapons, and we also need the money. Having said that, when you look at the big countries of Europe, and I'm thinking, of course, about Germany, but also Italy, by the way, they keep saying we need to be cautious about these sanctions. We need to be ambiguous about it. We need to surprise Russia when it comes to the content and the people that could be hit by it. So if you look at unanimity at this point, there is unanimity about the idea that this will cost Russia dearly and it will cost Russia a lot of money. But when, that is still something where you clearly see there's no agreement.
Yeah, and Draghi splitting away in terms of what might be on the plate from an energy perspective. Maria, thank you very much. Maria Tadeo there, catching the ministers as they go in. Let's turn to the key market drivers this morning. Christina Aquino is with me. She has some interesting perspective on volatility. We've got vol in the ruble nowhere near where it was during the Crimea annexation. But when you look at volatility, Christine, good to have you with me. What's the direction of travel?
Well, Manus, I think volatility has been moving generally higher this year, and it's no surprise because we have been seeing a number of catalysts that really introduce this concept of two-way risk in markets more than ever. And I think we're seeing that across the board as well, definitely seeing it in stocks, but also seeing it in bond markets, which generally tend to be a bit more calm, but that is definitely not the case this year. Of course, this has all been being driven by this idea of a sea change in monetary policy across the globe. The Fed, of course, leading that with expectations, again, from the likes of JP Morgan, of the Fed delivering as much as 9 rate hikes this year. But, you know, it's a sea change for all central banks in general. And so I think, generally speaking, it's been difficult for traders to really get a sense of what the trends are this year because there is no such thing as a trend at the moment.
Indeed, and JP Morgan, I mean, this is the other big narrative for the Fed. They're talking 9 hikes. I've had several guests this morning saying that's just too far, too aggressive on the terminal rate from UBP. But what does that do in terms of shifting, you know, for the Fed this year? 9 hikes?
Yeah, Manus, I mean, that is definitely a lot more than what markets are currently pricing, which is about 6 25 basis point rate hikes by the end of this year. But, you know, JP Morgan is not the first to kind of have a call that exceeds what we're seeing in terms of market pricing. I think what this generally shows us is that the discussion is shifting a little bit from that idea of a supersized 50 basis point rate hike in March and more toward the longer term trajectory of the Federal Reserve. You know, we've heard from several officials as well commenting on this idea of just more broadly delivering, tightening throughout the year and keeping that momentum up. And I think that is what is reflected in the JP Morgan call as well. And of course, let's not forget rate hikes are only one part of the discussion. The lever that the Fed has in terms of policy also exists with their balance sheet runoff. That certainly is likely to get more attention as we move throughout the year, especially when they're trying to decide which securities they're going to run off first. I think the minutes indicated that they might start with their mortgage-backed securities and keep a preference for those longer-term treasuries, which could keep a lid on that rise in bond yields here.
And we've got this sell-off in China tech. I did it earlier. Tencent was down nearly 6%. People are concerned, and the regulators have made it very clear they're not done with regulation yet in the tech space. So what's the shift so far on this story?
Well, Manus, I think definitely something for investors to watch for sure. The tech sector in general has been battered this year for a number of reasons. Again, we're talking about that shift in Federal Reserve policy, but also just the idea of, you know, the tech sector not necessarily basking in that same glow as it had been over the last couple of years. Just what we've seen from the earnings season, investors are really paying more attention to the fundamentals and trying to differentiate which tech companies have more going for them, have this idea of sustainability moving forward, and which ones are a bit more flash in the pan. You know, I think there's definitely been a differentiation, for instance, between the big tech companies and also between big tech and this profitless tech sector. And I think that's just going to continue. Investors are going to be a lot more discerning. And again, that will just serve to introduce more volatility, more two-way risk into these equity markets.
Christine, thank you very much. Christine Aquino there with the very latest on what's going to drive the vol in these markets. To JP Morgan's note, the forecasts are for 9 rate hikes from the Fed. We'll put that to Janet Mew at Bruin Dolphin. What would that do to an equity story in the growth to value? This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Welcome back to the Open. We are 14 minutes into the trading day this Monday morning. There is a reappraisal of risk, and it is fundamental. The risk motive improves as the Putin-Biden summit may take shape. Now, the question is this. It's predicated on the view that Russia does not invade Ukraine. What is at risk here? That is what you must ask yourself. A fundamental question is this. Is this perhaps the grandest and most global stage that Putin could ever ask for? A moment to negotiate and walk away, a moment to negotiate and de-escalate. The decision tree analysis is endless, but for the moment, the market is banking on a de-escalation, and that is what diplomacy will do. And Russia has countless times said they don't want to invade Ukraine, despite the buildup of troops. To that end, you see the reduction in recession risk if there is a political agreement. European equity markets are up this morning. The DAX is off its highs of the day. Paris is up by 0.6%. Macron has real skin in this game, because if he's brought them together, Putin and Joe Biden, just think what that would politically do for him as he goes to an election. He needs a win from Putin. This could be the win for Macron that he needs going to the polls, rather than the spectre of higher conflict that could hand something to the Le Pen camp. London's up by 0.6%. What's moving, what's shaking? Credit Suisse has a report that they were banking and doing business for people involved in a whole variety of less than acceptable businesses. They have denied that people were involved in human rights abuses. They say that they closed down many of these accounts. We'll get details on that later. Credit Suisse, as you can see, is down 0.5%. It was called a lot lower. Clipper Logistics, I like this one. Clipper Logistics, GXO has reached a preliminary agreement to buy Clipper Logistics. The price tag, £943 million, $690 in cash if you're a stakeholder, and the rest you're going to get some GXO shares. Stock is up 13.9%. I wonder, do I have any of that in the pension? Don't know. Galp, caught up with the CEO. Cracking conversation. He's talking about a buyback and certainly a cash dividend coming through there. So those were the top lines on Galp. Despite that, we're down 1%. It was Andy Brown. He spoke to me, and they are saying they're still scanning the market for renewable energy opportunities. Stock down 0.9% and change. Okay, let's digest, take a moment, absorb, and think of the possibilities. The possibilities of a rapprochement, the possibilities of decreased tension between the United States and Russia. And then there's the Fed, JP Morgan, the economists out there with a big call. 9 rate hikes of 25 bips apiece. What would that do to your growth to value proposition in those set of meetings to tamp down inflation? Janet Murray has had time to reflect on all of this. Janet, good to have you with me this morning. At the moment, we're leaning into the de-risking by diplomacy as the narrative. How have you reacted, positioned, or changed any of your risk positions in the past couple of weeks on the specter of diplomacy not working between Russia, Ukraine, and the United States of America and Europe?
Good morning, Menace. Thanks for having me. Well, we have not reacted preemptively for uncertainty in geopolitical events. We don't think it is a sensible thing to do because the situation is quite fluid. There is a lot of uncertainty, and obviously there has been a knee-jerk reaction in market in terms of risk asset. But I think we have to see how the situation evolves because there seems to be a lot of diplomacy going on, and it seems that it is in each other's vested interest not to escalate further, and so we don't preemptively react to that in terms of geopolitical risk.
And it's great to have you back in the studio, back in the main London set, so it makes for a very different dynamic and conversation. The big call this morning is the risk. It's one house, but it is quite a prescient house in terms of their calls. It's JP Morgan calling potentially for 9 rate hikes of 25 basis points at a time. Do you think there's a risk of that near term? Do you think that you could see yourself agreeing to 9 rate hikes as JP Morgan does? And what would that do, Janet, to the growth to value trade, the broad trade in the first instance?
So we don't agree that the rate hike profile in the U.S. will be as aggressive and as steep as JP Morgan has penciled in. 9 rate hike is actually, yeah, it is. We don't think it is going to happen. We think it will be in the range of six rate hike. That is what the market is anticipating at the moment. We think that's probably the max that the Fed may do. And that's really because I think the Fed is, they say they're going to be nimble. So what we think is that in the near term, consumer spending is likely to face headwinds because of inflation, and also the economy is slowing from the very rapid growth from last year. And what we are seeing recently is that the consumer confidence survey, for example, the University of Michigan confidence survey, is actually quite concerning. It's actually down to even the pre-COVID level. So it is a concern for us, and a consumer is really, really important part of the growth story. So in case we do see a bit of slowdown in that, it is very hard for the Fed to hike aggressively. And also our base case is that inflation is going to moderate from the second half of this year. It is still going to stay elevated, but it is going to slow down from the current level.
So what about the Bank of England then? If you think that that's a wee bit of a stretch too far for the Fed to do 9 rate hikes this year, and some are talking about that you do need a Volcker-style shock, Janet. So you know that is one camp. To the Bank of England, 4 voted for 50 basis points. Do you think that we'll get to 2% by the end of the year in the UK? What is the extreme on the rate hikes in the UK that you expect?
Again, we don't think that the UK can see a very steep rate hike profile. So currently, market is, I think, pricing in about 6 rate hike in the US. It fluctuates a lot. I mean, at one point they price in about 7, and we don't see that kind of steep rate hike profile. I think the UK is even in a more serious situation in terms of the squeeze in consumer real income, because you know we all know that from April there will be a number of headwinds, including the hike in national insurance and also the energy price cap hike. So all these doesn't bode well for the consumer. And again, we don't see that officials will be reacting that aggressively. And if you actually dig deeper into the Bank of England's inflation forecast, they actually, based on market expectation, that their inflation forecast is actually going to be well below 2% 2-3 years out. So they don't actually need to hike as aggressively as the current market profile have suggested.
Okay, well, let's see whether they run into a stall mode as well. Janet, stay with me. Janet Mew, my guest this morning from Brewin Dolphin. The PMIs are in from France on the Purchasing Managers Index. Now, it comes in a little bit better. This is only going to be something welcomed by the Elysee as they go into electioneering mode. PMI services 57.9. The survey was for 54. And on the manufacturing side, 57.6. And this is really the composite 57.4. So certainly looking for a stronger PMI on the soft reading. The index a year ago was at 56.1, so we're still up on that. It's the highest reading since July of last year, and the 15th month of expansion in France on the manufacturing side. We'll talk more about those numbers in just a moment. $100, ring a bell. That's the crowd. It's growing louder and bigger. The CEO of the world's largest independent oil trader, he says it could be around for quite some time. Triple-digit oil, that is. This is Bloomberg.
Has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. It's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like it.
Vitol CEO Russell Hardy there, speaking exclusively with Anna Edwards. Back with me is Janet Mewey from Brewin Dolphin. Janet, here we are. Everybody's talking about $100 oil. Look, the debate in that piece, and everybody should go to Bloomberg.com and watch Anna and Russell talking about this, is where demand destruction comes in. Do you see $100 oil, and how penal will it be to consumer confidence?
Yes, that's the question that our clients have been asking us, and I think that I agree. I think in the near term, I can't tell you the exact timing, but I think it could happen because I think primarily it's a supply issue. I think supply is obviously still very tight. You can see across many data out there, and there is a reluctance for OPEC Plus to increase oil supply at the moment, and also there is reluctance from the shale gas oil producer to also drill for more oil. I think you can see that from the oil rig counts in the US, that's, it's steadily picking up, but it's nowhere near pre-COVID levels despite the current high oil prices. So I think demand is going to return in the summer when international fly would intensify.
Janet?
So I think the supply-demand balance still
But keep an eye on that $100
oil.
oil. Janet Mewey, Head of Market Analysis at Brewin Dolphin.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open. We're 30 minutes into the trading day this Monday morning. There is a fundamental re-rating of risk. We'll get to that in a moment. The headlines this Monday: high-stakes talks. Officials say Joe Biden has agreed to a summit with Vladimir Putin as long as Russia doesn't invade Ukraine. Markets take the cue. US and European equity futures climb higher on the prospect of a meeting, casting aside the forecast by JP Morgan for 9 hikes from the Fed this year. Plus, living with COVID, the UK is set to announce the end of restrictions a day after the Queen tests positive. Equity futures are higher. There's a material belief that diplomacy will trump the escalation risk of conflict. European stocks up 0.5%. The Xetra DAX up nearly 1%. So we have absolutely spun it around. You're getting data across the Bloomberg terminal. February services in Germany rise to 56.6. The forecast was for 53. So that's a comfortable beat for France and Germany on the PMI. The soft services data is coming through nicely, but it is diplomacy that Macron has brokered, we understand, between Putin and Biden to have a physical summit that is driving the narrative this morning. It's causing oil to roll over, stocks to roll higher, despite the proposition by JP Morgan that there could be 9 rate hikes this year from the Federal Reserve. Do you think that that could be? Now, this is G or. This is your global ranked returns in terms of the Stock 600, travel, banks. Australia's open. Anybody fancy a flight to Australia? It's open now. If you're fully vaccinated, you can get there. Banks are on the up as the prospect of higher interest rates and the narrative coming from Evans that we need a substantial adjustment in rates. JP Morgan are talking about 9 rate hikes. What would the UK and Europe manage to do? That shifts your banks higher, and your basic resources is all about the de-escalation of risk in the world and growth, and receding recession risk in Europe drives your basic resources up if there is a de-escalation, and diplomacy does carry through. And obviously the PMIs are helping the narrative this morning as well. Well, from stocks to local currencies, there are pockets of emerging markets that are on the up. Aggressive central banks and high commodity prices are driving the advances this year in more than half of the 24 developing world currencies tracked by Bloomberg. And all of this despite the simmering Russia-Ukraine tensions. We're showing you a pretty powerful chart in the Bloomberg library. Luis Costa is my guest, Citigroup Global Head of Markets, Head of EMEA Strategy for FI and FX. Luis, always great to get you with us. So we were just showing our viewers and our Bloomberg terminal users just the gargantuan number of EM hikes. 3,720 basis points, and the Fed's at 0. So in your world, monster hikes, but is it commensurate with monster and enduring EM returns? Good morning.
Good morning. Good morning to you. You're absolutely right. I mean, it's about what the curves are expecting, what the curves implying, and we know that the front end of the U.S. curve has already absorbed a lot of our Fed hike expectations. So it's not like the Fed is necessarily at 0. But, you know, I take that chart. That chart is telling us a lot in terms of how hawkish EM central banks have been throughout, 2021 and the beginning of 2022. I mean, the Russians are still delivering hikes. Brazil also deliver a high. Some other LATAM central banks deliver hikes. So we might get more hikes coming from Poland very soon. So it's still an environment where this more defensive approach by EM central banks is continuously adding some carry cushion to EM currencies in an environment. You mentioned the French manufacturing, the German manufacturing, in an environment where we are not going basically to backtrack on this illusion that the ECB can be more hawkish, at least in the short term.
So there's a couple of things that I'm curious about. Last week, I dealt a lot with the carry trade and unwinding of the funding currency of choice in the carry trade. So if I want to be long, Brazil's up, by the way, to the dollar. Brazil's up, what, 8.5%? The Chilean peso's up 6.25%. What is the primary funding currency? Do I trade it on the cross against yen? How do you think the market is funding its EM trades at the moment?
Well, the market should be trading on a basket basis. I mean, we still believe that short term, there's a little bit more scope for euro upside. And believe me, I've been a massive bear on the euro for the past 2-3 years. But we do believe that a broad dollar will probably allow, euro FX to trade a little bit higher. But, we do like carry versus US versus euro. So we do like basket trades, buying Brazilian real versus euro and dollar, buying, South African rand versus euro versus dollar. Okay. I think that these are good trades to be in.
Luis, I'm going to interrupt our conversation for a moment. We'll pick it up together. There's a line coming from the Kremlin that there are no concrete plans of a summit yet for Biden-Putin. Now, this is critically important. We had said that there was the basis of a gathering to come together. Let's have a look at the riskometer, because I can tell you that you're going to see a very immediate reaction here. Yep, European stocks are slamming on the brakes. Here we go, Luis. Treasuries higher on the future. SPOOs roll over. Gold goes bid, and dollar-yen money goes in. Let's deal with this risk-off moment. We're going to have to deal with a lot of these. We're going to have to deal with an awful lot of these. Right. So let's get the context. That's the latest breaking news headline. First reaction to that from volatility in FX in your space, in your world.
Well, it's unfortunately, it's a bit to the dollar. And we, as you said, we are going basically to live with this higher geopolitical risk for quite some time. It might take us into the spring easily. No, not necessarily envisaging invasion, but we could be on the brink of something bad, for quite some time. But I wouldn't take those headlines, as something on stone. I think that's. I mean, there's still a very good possibility of better interaction, not only with White House and Kremlin, but also with Macron involved. So we know that there has been some degree of breakthrough over the weekend in the talks between Macron and the Kremlin. So people have to be patient, but we are not going back to zero geopolitical risk anytime soon.
Okay, and of course, then you get the second headline. You're right. We are going to live headline to headline and vol trade to vol trade. The Kremlin-Putin-Biden summit is possible if the leaders see the need for it. So you're right. There has been progress. We're going to deal with these incremental headlines piece by piece. So we've not given up all the gains on the S&P 500. We're up 0.5%. 10-year futures, Luis, are still down on the day. 6:30 seconds, if I'm not wrong. We're pricing on the bonds. Equity futures still hold the gains. They just per the initial sort of rally. Let's talk about the ruble. Okay, second worst performer in your space. Now, Valerie, who puts together the charts, queen of charts at the moment, is the resident title she's got the bearish route. She's got the options traders, and this is where I want to talk to you. It's the second worst performing currency in the EM basket, but they're building up the put option positions in this. Talk to me about the flow in ruble. A lot of people have criticized me when I say, look at the CDSs, look at them as being a litmus test. I've got lambasted for that. So tell me, what is the depth and liquidity in the ruble trade when I see put options trading at levels, the volume of trading options, the most bearish on the ruble since the Crimea, the aggression towards Crimea?
I think it's very interesting. It's actually fascinating because implied vols are obviously higher. They are obviously reacting to the crazy headlines and the yo-yo trading on a daily basis. But it's very interesting that flow-wise, we continue to see appetite by more dynamic investors, to capitalize on a potential dollar-ruble downside down the road, meaning ruble appreciation once geopolitical risk subsides. But, we also know that foreign position in ruble real assets, means bonds and equities, is still huge. It's still high, right? Despite the deleveraging we had since 2014 and 2018, but it's still a significant deleveraging that could happen if things continue to go south in terms of geopolitical and diplomatic efforts.
Okay, Luis, thank you very much. As you say, we live headline to headline, and we should caution as they drop. Luis Costa, Citigroup Global Head of Markets, CIMA, FX Strategy and Rates. My guest this morning on EM Markets. Coming up, diplomatic efforts to defuse the Russian-Ukraine tensions. They continue. We speak to the Ukraine's former ambassador to Austria, who advises Ukraine's national energy company, Naftogaz. The interview to come. This is Bloomberg.
Is moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Headlines are rolling in from the Kremlin. They see no concrete plans as yet for Putin and Biden's summit. However, they do say that there are specific agreements so far only on the foreign ministers to meet. The Kremlin says that a Putin-Biden summit is possible if the leaders see the need for it. So, you've got to work out between the lines. It sounds as if there is a breakthrough. We're just not 100% sure of the format or how definite it is. So it puts two-way risk back into the bid tone that you saw in the equity story this morning. S&P futures are coming off their highs. We were up over 1% at one juncture. We're now up 0.5%. So we've pared some of our gains on European stock futures and on the equity futures in the United States of America. 10-year yields, futures drop, yields rise, again, leaning into the JP Morgan story that you could have 9 rate hikes this year rather than the geopolitical tensions. And the ruble, actually, this is the dollar down and the ruble strengthening. And you have got positioning, pretty hefty put option positioning on the ruble at the moment. So you're just seeing the strength dissipate ever so slightly. Let's expand the conversation around the concept that President Biden has agreed in principle to meet the French proposal of a summit with Vladimir Putin. That is according to the White House. I've just updated you on the Kremlin's response so far in terms of the concrete nature of the plans. Maria Tadeo is set to have a conversation now with Ukraine's Foreign Affairs Minister. She spoke to him a little bit earlier.
Secretary Blinken assured me that, as it has been the case until now, no decisions about Ukraine will be taken behind Ukraine's back. And we will closely coordinate with him on the evil as they will be preparing this summit.
And of course, Zelensky, the president in Ukraine, calling for sanctions before there's any escalation. Let's get to Maria. She's on the ground. She has a guest with her today. Maria Tadeo.
Yes, indeed, Manus. And now we're joined, of course, by Alexander Sherba, who's joining us from Ukraine. Alexander, it's a great day to be speaking with you. You have immense experience when it comes to diplomacy. You know the Ukrainian political circles very well, and you're also an advisor to Naftogaz. So you put together all of the elements here. So I want to ask you, from your perspective, but particularly being in Ukraine today, what is your reaction to all of the headlines that we're seeing, particularly about this meeting between President Biden and Vladimir Putin? Is that going to be enough to de-escalate?
Good morning, Maria. Well, we in Ukraine live one day at a time. Quite frankly, last night I went to bed with understanding that there is a higher than 50% probability of a Russian attack next morning or on 22nd. There is no attack today, so it's going to be a good day. About the probability of Biden-Putin meeting, I asked myself what is new, what has changed, so that this meeting would be fruitful this time. But nothing should be untried, of course, to protect peace. And this is also maybe not an overwhelmingly good, but a good news.
And I have to ask you, of course, on Saturday, President Zelensky was at the Munich Security Conference. He did get a big standing ovation, but he also had a tough message. He said Ukraine needs sanctions and it needs weapons. Why is it so important for Ukraine to have this preventive sanctions? And by the way, the European Union is still saying that they don't have unanimity for this, that they want to wait potentially for an attack from Russia. In your view, does that make sense?
Absolutely. I mean, Putin, Russia has already done immense damage to Europe. I mean, how much less Europe feels right now, the world feels. It feels like a complete failure of the whole security structure, security order in the post-World War II world. So the damage has been done, and it cannot be unpunished. The point of introducing sanctions on Russia, it can be disputable. I understand that, and understanding how detached from reality Putin is, I understand the caution of the Western leaders, but you should understand also Ukraine, because we have a crowd of armed goons surrounding our house, and every morning we wake up and they're standing there and they're saying we don't mean anything bad, we're just standing there with all these arms, and we want you, Ukraine, to give us guarantees of security, which is an insane situation. You should understand that.
Right, and of course, as the advice that you give to Naftogaz, I wonder, when you look at Nord Stream 2, the Ukrainian perspective, how big of a political threat is this pipeline, and do you still hope that Germany is going to ditch it?
Of course, this feeling of this, in-your-face attitude that Putin has, it's because the West was helping him and catering to all his wishes, including building these two gas pipelines, which are absolutely unnecessary. Ukrainian gas transportation system is covering both Nord Stream 1, Nord Stream 2, and some more. Europe can be supplied via our gas transportation system. So at this point, it would make sense to stop Nord Stream 2 and to say that if you attack, if you invade Ukraine, stop Nord Stream 1. Europe won't stay without gas. Russia doesn't have anywhere to deliver gas aside from Europe. No technical possibility for that. Most of the gas deposits in Russia, they right now can go only one way. So don't be fearful. Ukraine isn't fearful. You shouldn't be fearful either.
And Alexander, just a final question. Again, you say Ukraine is not fearful, but I do wonder, Russia does say the Ukrainian infrastructure is old, is not reliable, and the fees that you're making from transit, frankly, are not worth the money the buyers are paying for. What is your rebuttal to that?
Well, this is what they do. They lie. They lie on industrial level. I mean, look at all the incidents that have been at gas transportation system towards Europe. Most of them were on the Russian side, not on Ukrainian. Our big advantage is we have a very versatile gas transportation system. We have not one, not two, but many pipes. If something happens at one pipe, we can go via different pipes. It's an immense huge gas transportation system that includes the biggest underground storage in Europe, where Europe can pump gas during summer when the gas prices are lower and then use it during the winter. So it's not about Ukraine's interest, it's about Europe's interest, and it's about Putin's game to cut off Ukraine as energy actor.
Well, Alexander, thank you so much for joining us on Bloomberg. Of course, I was Alexander Sherba, former diplomat and advisor to Naftogaz. And Manus, a lot of this, as he mentioned, the energy conversation very connected to the political. And as he says, really for Ukraine, maintaining that transit and the transit fees for Russian gas into Europe is so crucial.
Absolutely, Maria. Great interview, great get. Maria today with the very latest on Ukraine, Russia. A quick breaking news line on Ant Financial. Now, this is part of Jack Ma and Alibaba's empire. China is telling banks, this is a Bloomberg scoop, China is telling banks, state-owned enterprises, you must report your exposure to Jack Ma's Ant Financial. Now, this is part of a much bigger scrutiny and review of the billionaire Jack Ma's financial empire, according to people familiar with the matter. You've got multiple regulators, the banking watchdog, telling institutions under their oversight to examine their exposure to Ant, its subsidiaries, and even to shareholders up to January. So this is certainly going to weigh on, well, it can have an impact on Alibaba. This is the Hang Seng Tech Index, as you can see over the past 5 days, down 3 1/8%. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. Boris Johnson is set to announce an end to England's COVID-19 regulations a little bit later, a day after the Queen tested positive for the virus. Let's bring in Leanne Guerin. She's been tracking the story. So, Leanne, what are the details of living with COVID? What is the plan?
Manus, it's great to see you again. And guess what? Boris Johnson is about to announce this plan. And he said it is a moment of pride for the country. So we're expected to hear later today, if you do test positive for COVID-19, you'll not have to self-isolate by law anymore. So we're going to get new guidance into the precautions around testing positive. We're also hearing that the government is set to unwind its access to free lateral flow and PCR tests in the country. This is because they are costing about £2 billion each month. And as more people do receive vaccinations and hospital numbers do go down, the government is now confident that people can get back to work, Manus, and that people can also be safer as long as they've had their 3 vaccinations. So positivity here, and we are expecting Boris Johnson to make that living with COVID plan announcement in Parliament as everybody does return from recess. But of course, this comes at the backdrop as Queen Elizabeth did test positive for COVID-19 yesterday. The 95-year-old monarch is said to be experiencing mild symptoms. And you know what else, Manus? Let's see how this new unknown goes for the country.
Oh, there you go. There's the breaking news. Leanne, thank you very much. Leanne Guerin with the very latest on living with COVID. That's it from me. The back to normal tomorrow. Don't worry, Anna is coming back. European Market Open. Next up, France decides. Francine Lacroix on tour à Paris.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Emmanuel Macron's big diplomatic push. The French president proposes a diplomatic summit between Joe Biden and Vladimir Putin. The Kremlin says there are no concrete plans for the meeting. The polling places the presidential incumbent as favorite to win the April election, but a crowded field of candidates is likely to make things difficult for Macron. And stay with Bloomberg. France decides. Don't miss our top lineup of exclusive guests today. Later on in the hour, we're joined by the French Finance Minister Bruno Le Maire and by the former ECB President Jean-Claude Trichet. You can send in your questions on IB Plus TV Go. You can also reach out to me on Twitter. Now, good morning, everyone, and welcome to Bloomberg's France Decides, a look ahead to this year's French presidential election. I'm Francine Lacqua here in Paris. Now, of course, the focus has been on the number of calls that Emmanuel Macron has done to world leaders this weekend. He's really been leading the diplomatic efforts to find a solution for the Ukrainian crisis with the U.S.-Russia diplomatic summit. Now, President Joe Biden has accepted, in principle, a summit with Vladimir Putin. That's on the condition that Russia does not invade Ukraine. Now, in the past hour, though, the Kremlin has said that there are no concrete plans yet for such a summit. The spokesman, Dmitry Peskov, says that it's premature to organize a Biden-Putin summit. Well, joining us now is our reporter on the ground in Brussels, Maria Tadeu, who's been covering this from the very beginning. So, Maria, first of all, what can we expect from the meeting between Biden and Putin if and when it happens?
If and when it happens, Francine, and that is really the big question today in Brussels, particularly because we've been big-time whiplashed by the comments from the Kremlin saying at this point there is no reason or no obvious reason to put a date on this summit. What we do know is that a lot of this is coming after a major diplomatic effort by Emmanuel Macron, who was really hitting the phone yesterday. He spoke twice with the Russians at 1 a.m. Moscow time. He was still on the phone with Vladimir Putin, and a lot of this will be preconditioned by the meeting that Sergei Lavrov and the U.S. Secretary of State Antony Blinken will have on Thursday. So they will prep, or in theory would prep the ground for a big meeting between the two leaders. But again, to be seen at this point, especially after the Kremlin says we just don't see a date yet.
Maria, there's growing talk about these preemptive sanctions on Russia as a means of deterrence. First of all, does it actually deter Russia? And is this what Mr. Zelensky has called for over the weekend? How much consensus is there around this?
Francine, this is the biggest topic this morning in Brussels, particularly after that speech from the Ukrainian President Zelensky on Saturday at the Munich Security Conference. He was very vocal, he was very passionate, and he did say, at this point, Ukraine is defending Europe. We are in the midst of this proxy war between the West and Russia. We need sanctions and we need weapons. Now, this morning, interestingly, a number of countries saying we want to surprise Russia and we want to keep it ambiguous, but when you speak to Baltic nations, and particularly the Eastern Europeans that are really very close proximity to Russia, they say at one point this is going to be an attack. Russia's not going to declare war. We're probably going to see attacks that will come by the thousands that we've seen this weekend. At one point, do we say we need preventive sanctions?
Yeah, and I guess the million-dollar question also, which is what people have been trying to figure out, if the U.S. keeps on calling out Russia, does it make it more likely that Vladimir Putin actually moves, or does it deter him from it? Thank you so much for the roundup. Our European reporter there, Maria Tadeo in Brussels. Now, France, of course, heading for a tight presidential race. Voters go to the polls in the first round of the presidential election on April 10th. Assuming no one wins a majority, the top two candidates then take part in a runoff 2 weeks later on April 22nd. Well, my co-anchor Tom McKenzie is in London to look at the main candidates. Hi, Tom.
Francine, good morning. Yes, this year's presidential election presents a crowded field of candidates. Let's go take a closer look then at the main contenders. First up, the centrist incumbent, of course, Emmanuel Macron, the 44-year-old, just 44. The president is yet to officially declare his candidacy for La République En Marche. That's his party, of course, but the polling places him as favourite to win the election, though with a tighter margin than back in 2017. Far-right Rassemblement National candidate Marine Le Pen, she's been tipped to face Macron in the final round, like she did in 2017. However, she continues to face the challenge of detoxifying her party's xenophobic image while also pleasing hardline right-wingers. And Valérie Pécresse is the centre-right candidate for Les Républicains, initially seen as Macron's main threat. A faltering campaign so far has seen her slip in the polls. In the past, she described herself as two-thirds Angela Merkel and one-third Margaret Thatcher. Another contender for the right-wing vote is Éric Zemmour. The far-right challenger burst onto the political scene in France in 2021 after he shook up the campaign with his immigration zero rhetoric. And on the left, the main candidate is Jean-Luc Mélenchon, a staunch critic, of course, of Macron's economic policies. The 70-year-old has so far failed to get the momentum that gave him almost 20% of the vote back in 2017. Back to you, Fran.
Yeah, it's really incredible how, of course, this presidential race is heating up. I've been in Paris over the weekend, Tom, and really on radio, that's everyone talking about that. And we've also had a good listen to the main candidates. Now, stay with Bloomberg's France Decides. Don't miss our top lineup of guests. Later on this hour, we're also joined by the former ECB president, Jean-Claude Trichet. But up next, the French finance minister, Bruno Le Maire, joining us for an exclusive conversation. And you can send in your questions on IB Plus TV Go. Let's go to the markets with our Tom McKenzie. Hey, Tom.
Francine, so an hour into the trading session here in Europe, you're now range-bound across the benchmark European stocks 600, pairing the gains that you'd seen at the open of these markets. That will be down to the geopolitics. It just becomes murkier with the Kremlin coming out saying there is no concrete date or plan for this proposed meeting that we know the French have been trying to organise between Presidents Putin and Biden. So you're currently down about 0.1% on the benchmark. You had seen some of these haven bids for the yen, for gold, unwind. That is starting now to push back to some extent because there's anxiety in these markets on the back of these comments from the Kremlin. The futures stateside, of course, there's no trading in the US today. It is a national holiday, President's Day. Futures, though, pointed to gains of 0.2% when equity markets do reopen. The ruble has gained, it's coming off a little bit from the earlier gains. Equity markets, by the way, over in Russia, taking a leg lower. And in terms of that gold picture then, currently down 0.1%, but it was lower by close to 0.3 or 0.4% earlier in the session. Again, investors reassessing where they want to be in terms of these havens, given the very murky picture out of Russia and the geopolitics. And of course, over the weekend, we had some very stark calls from the likes of President Biden saying that, in his view, Putin has made his decision to invade Ukraine. By the way, when it comes to the UK, you've got Boris Johnson making an announcement in the next couple of hours about removing the restrictions on COVID-19. And in terms of the data, we had some positive services and manufacturing data out of France and Germany. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Secretary Blinken assured me that, as it has been the case until now, no decisions about Ukraine will be taken behind Ukraine's back. And we will closely coordinate with him on the eve as they will be preparing this summit.
That was Ukraine's Foreign Minister Dmytro Kuleba speaking to Bloomberg. Now, joining us for an exclusive conversation is the French Finance Minister, Bruno Le Maire. Of course, it's election year, so we'll get onto the reforms. But first of all, it's really geopolitics, Mr. Minister. Thank you so much for joining us. Politics and geopolitics is really dominating with a huge, forceful role that France is trying to play in trying to ease the tensions. First of all, Minister, what kind of impact would sanctions on Russia have on the French economy?
It would, first of all, have a very deep impact on Russia, on the Russian economy and on the Russian interest. But it's time for de-escalation. It's time for diplomacy. And there has been a major breakthrough last night, thanks to the efforts made by President Macron. There is the possibility of having a meeting between President Putin and President Biden. The two leaders agreed on the principle of a meeting. And I think that we should all make the best efforts to make this meeting a reality. Once again, President Macron played a key role to trigger this meeting between the two leaders.
And of course, we know that President Macron also, called many leaders over the weekend, but we just heard from the Kremlin that nothing is on the table for the moment. So again, you put all the, efforts diplomatically. If it doesn't work, what kind of sanctions should we be looking at?
I don't want to give too much details on the sanctions, because if we want the sanctions to be efficient, we have to trigger the sanctions when it's time to trigger the sanctions. But one point must be very clear. If there is any attack from Russia to Ukraine, we have a set of sanctions that are still available and that would hit the Russian people, the Russian state, and the Russian economic interests.
Including energy. Certain European leaders have said energy should be off the table. And how willing are the citizens of France to pay to make sure that the Ukraine is safe?
Once again, we are aware of all the consequences, and I will propose to my European counterparts during the next ECOFIN at the end of the week to discuss this question of the Ukraine situation and the economic consequences of the situation in Ukraine. But you know that we took all the necessary decisions to face such a situation. And I think that on the long term, the consequence that we must draw from this crisis is that Europe must be more independent as far as energy is concerned. We must produce more energy, and energy which is emitting less CO2. That's exactly the politics that has been proposed and decided by President Macron, investing in renewable energies and in opening new nuclear plants in France.
So the scenario is still, quite murky, let's say, because there's a transition which France has been leading on. At the same time, there's still a third of European energy that comes from Russia. We could see elevated prices for gas and oil for quite some time. What does it mean for the economy? Are we at a juncture where actually suddenly everything could go wrong?
Once again, we are aware of the consequences that such a conflict could have on the European economy, on the energy prices. We already had a very big impact on energy prices over the last weeks, and we are aware of that. But the political principle is more important. We refuse any kind of attack against the Ukraine sovereignty. And President Macron has been very clear. He is making all the diplomatic efforts to have a de-escalation in the conflict and to have a meeting organized between President Putin and President Biden. But one thing must remain very clear. If there is any attack against the Ukraine sovereignty, we stand ready to react.
Minister, for the French citizens, you've also capped higher energy prices at 4%. What does it mean for EDF shareholders? Are you willing to compensate them?
You know, we took that decision because it would have been unbearable for both the French population and for the French companies to have such an important increase on energy prices, on the electricity prices. It could have been more than 35–40% of increase in energy prices. That's why we took this decision by getting rid of the electricity taxation, 8 billion euros less for the French state. We also ask EDF to make an effort, but once again, the key purpose of that was to reduce the bill for both the French people and the French companies.
But Minister, why just not nationalize EDF then, take it out of the market, given the huge price
That's
swings?
another question, but for the time being, the key question for EDF is to have fresh money. And that's why we decided to provide 2.1 billion euros to EDF, because the key question for EDF now is to have fresh money to face the difficult situation, to go through that difficult situation, and also to invest in the plan that has been decided by President Macron, more renewable energies and 6 new nuclear plants.
But Minister, would you rule out actually a nationalization of EDF? Or
I'm not ruling out any kind of solution, but you know, if you want to be efficient, you have to go step by step. The first step is to provide fresh money to EDF. Then we have time to think about the best structure for EDF.
How long do you think these elevated prices for gas and oil will stay? And how much pain is it? If it's a year, how much more subsidies can you put in place?
I think that everybody must be aware that till there are some geopolitical tensions in Ukraine, and taking into account the fact that there is a very strong economic recovery in the United States, in Europe, everywhere in the world, which is quite good news for all of us, we will have to face an increase in energy prices. And that's why we need to have a short-term approach, which is to protect the people and the companies against this increase of energy prices. But we also must have a long-term approach, which must be based on new investment and also a new European electricity market, which must be more efficient and less costly.
But Minister, this is short term, and then longer term you go to the transition. What happens in the middle? For how long can France actually help with these prices and cap them?
We will stick to that policy until we have a decrease in energy prices. I don't want the French people to pay for the climate transition and to pay for this increase in energy prices. I think that it would be unbearable for the French population, and it would be also unbearable for the French companies. So we will stick to that policy over the next weeks, over the next month, and we are, on the same time, investing a lot of money on new nuclear plants, renewable energies, and hydrogen.
If Emmanuel Macron, as actually a lot of pundits are expecting him, I think they give him an 80% chance to be elected. Does that seem fair?
I hope that Emmanuel Macron will be re-elected, of course. And I think that if Emmanuel Macron is re-elected. But for the time being, he has not made any announcements about his candidature. But I hope that he will be candidate, he will be re-elected, and we will stick to that economic policy that gave us such positive results for the French population and for the French nation.
Including the energy subsidies?
Including the energy subsidies for the coming month, because you cannot explain to the people that they have to pay for this increase of prices.
Minister, talk to me a little bit about what that means for debt. So going into the next 2 to 3 years, how do you see the French debt going compared to, fiscal stability?
I think that the French debt will go down, and it is already the case. I just want to underline how efficient the political and the economic choices we have made, I mean all the 27 member states, have been efficient over the last month. We decided to protect our companies and to protect our employees. The result of that is that we have a very strong economic rebound, more than 7% in France in 2021, which means more tax revenues, 20 billion euros. We decided to devote all those 20 billion euros of tax revenues to the reduction of public debt and to the reduction of public deficit, which means that we will come from 115% of public debt to 113, and from a level of 8.2% of public deficit to 7%. Having more growth is the best way of reducing your public debt and your public deficit. It's not enough, but it's the right starting point.
Ministers, thank you so much. We'll go on to those numbers a little bit more. We'll also see what the Banque de France says on what France can do to even increase that 7% GDP growth. Bruno Le Maire stays with us. Now, coming up, we'll have more with France's finance minister. He stays with us for his look at the French economy. We talk taxation. We talk more about the debt. And we, of course, talk about inflation. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Five years ago, a 39-year-old investment banker turned economy minister swept into the highest office in French government. The night he won, Emmanuel Macron described himself as a man of action.
We have the strength, the energy, and the will.
The will for an ambitious program of reforms. First, the labor market, a politically dangerous issue in France. The promise to make it easier to hire and fire was the first reform he pushed through. The overhaul of unemployment benefits also passed despite opposition from powerful unions. Second, fiscal reforms. Macron has delivered on gradually eliminating the residency and wealth taxes. He's lowered the corporate tax from 33%, the highest in Europe at the time, to 25%. His government also pushed for an overhaul of the international tax system, aiming to establish a global minimum corporate tax of 15%. But when Macron took on climate policy, things didn't go as planned. A proposed hike on fuel taxes unleashed the Yellow Vest protest at the end of 2018, which quickly grew into a nationwide anti-government movement.
People who support him will say that he has managed to make France more attractive, but within France, there are certainly people who think he hasn't done enough to support those who are poorest.
Finance Minister Bruno Le Maire tried to stay focused with the so-called Pact Law, a range of measures to simplify business creation and block unwelcome foreign investments, such as an attempt by a Canadian firm to acquire supermarket giant Carrefour. But when the time came for one of the most ambitious reforms, the pension system, the pandemic struck. From 2020, the whatever the cost mantra saw the injection of nearly 200 billion euros to protect businesses and save jobs. On top of that came a 100 billion euro package to help key industries recover. That also meant abandoning another election pledge to cut public spending and eliminate more than 100,000 public sector jobs. Consequence, the French deficit and public debt surged. Macron is now betting on a strong economic rebound, the fastest among the four biggest Eurozone economies, to replenish the state's coffers and to give him an ace up his sleeve in the race to the Élysée. Caroline Connon, Bloomberg News, Paris.
Well, that was Bloomberg's Caroline Connon looking back at the economic policies of Emmanuel Macron's government, including, of course, the finance minister, Bruno Le Maire, still with us for more on the French economy. So, Minister, thank you so much for staying with us. We were just hearing about some of the successes that France had been able to put in place through reforms. Growth, 7%. What do markets actually misunderstand about either French politics or the French economy going forward?
I think that they misunderstand our total determination to have more growth, our total determination to have a sustainable growth, and also our total determination to come back to sound public finances. And on the last point, I don't want to have any kind of misunderstanding. We want to have sound public finances in France to reduce the level of public debt, not only by growth, even if growth is the new starting point for coming back to sound public finances, but also thanks to structural reforms. We decided a reform on the labor market. We will decide and introduce a reform on the pension system, and also by reducing the level of public expenses in France. That's the program on which we have been elected in 2017, and we will stick to that determination.
So, Minister, first of all, when you look at some of the pension reforms, what are we actually expecting from that? I mean, this is one of the hardest things to do in France. Will it get done if President Macron stays on?
It will get done, and I'm totally convinced that it will get done early in the mandate, because it must be a starting point for a new improvement of the economic situation in France. We need to have more people on the labor market. We need to have more growth to face the climate change and to have a sustainable growth. And I think that a large majority of French people are fully aware of the necessity of a pension reform.
If you look at the pension reform and the difficulties with that, I know Mr. Macron also promised to get rid of 120,000 public employees. That was extremely hard. Why was that so hard?
I think it's always hard when you are explaining that you must get rid of employees, either public or private. And I think that we need to change our approach. The idea is not to getting rid of public people. The idea is to be more efficient and less costly. That's our political goal.
If you want more stability on the budget, does it mean that tax cuts are off the table?
No, we need more tax cuts. We need more tax cuts for the private companies and especially for the industry. If you want to have a strong industry, you cannot have a level of tax production taxes that is more important, that more heavier than the one that you have in Germany or in Italy. You know that we decided with President Macron a reduction of the production taxes of 10 billion euros, and there is a need for more reduction in the production taxes because this is a too heavy burden for the French industry. You know, the key point is not the tool. The key point is the economic goal. Our economic goal is to increase the level of the French industry in the global French GDP.
But then, Minister, where did you get the money?
The money is given by growth. When you have more growth, you have more money and the possibility of reducing the level of public expenses, of public debt. We should always recall the failure of the 2008 crisis, when we decided as a solution to come back too early at too speedy pace to sound public finances, which means austerity. Austerity was a total failure. It led to less growth, less employment, and more debt. Austerity is clearly a dead end for the European economy. So we must invent something new. And the point on which we are working, the new policy on which we are working with all the 27 member states, it's not only a French solution, it must be a European solution, is to find a new balance between investment and sound public finances.
Minister, I'm getting quite a lot of questions actually from economists that are watching this program, so thank you for everyone watching on TV and on radio. Also, hello to our radio listeners. Minister, what happens when there's the first interest rate hike from the European Central Bank? Is France ready, and is this going to be the main challenge for the next president?
Of course that we stand ready. We are fully aware that we are coming back to a normal political situation and a normal economic situation, which means that there will be changes in the monetary policy, and we are fully aware of that. But if there is a change in the monetary policy, we also need to have a change in the economic policy. That's the key point, and that will be at the core of the discussion among the 27 member states during the informal ECOFIN in Paris at the end of the week. We must not come back to business as usual. We just are out of the most important economic crisis over the last century. Coming back to business as usual would be a total mistake. We need investment. Investment for the fight against climate change. Investment to get access to disruptive technologies like the semiconductors, the electric car batteries, the cloud, the biotechnologies, which means that we need to find this new economic policy based on investment and some public finances.
Minister, how many finance ministers are actually behind this? So we caught up with the Austrian finance minister a couple of weeks ago in London, who says there's more frugal, actually, countries in Europe than the four we heard a couple of years ago. So how much of a fight will you have on your hands?
I don't see so much frugal countries in Europe now. I'm just seeing countries that are investing in renewable energies and new technologies. I see the Netherlands investing 75 billion euros in a new investment plan. I see Germany investing 60 billion euros in renewable energies to face the new energy policy in Germany. I see France investing 30 billion euros in this new investment plan. So I see a large majority, not to say all the 27 member states, being aware of the necessity not to come back to business as usual, but to invest in the fight against climate change and in the key technologies that will allow Europe to play the same role than China or the United States. What do we want? Do we want to have our own supply chains like China or like the United States? Or do we want to be dependent on the semiconductors coming from Taiwan and the electric car batteries coming from China? We want to be independent.
How long will it take for that to happen?
It takes some years. It's a new strategy for Europe, but it will be a winning strategy. And that's the only one which will allow Europe to play its part between China and the United States. Let's have a look at the new globalization. The new globalization is based for the 21st century on independence. China wants to be independent. The United States want to be independent. Europe must be independent as far as the key technologies are concerned. I don't want Europe to be for its automotive industry, for its aeronautic industry, too much dependence on the supply chain from South Korea, China, or Taiwan.
Minister, I was going to ask you actually about Renault. Will France continue supporting Renault if they continue doing EVs in China?
I think that we made very clear that the French state stands behind all its key industries, Airbus, Renault, EDF, because they are at the core, or Air France, they are at the core of the French economy. So if there is a need to support any kind of companies in which the French state has share, like Renault, EDF, Air France, or some other companies, we stand ready to support them.
Even if they don't necessarily play ball in trying to get some of the supply chain back to Europe?
They have to put some new supply chain in Europe and in France. And I made very clear to Renault, with the very good leadership of Luca De Meo and Jean-Dominique Senard, that they have to invest more in Europe, to create more jobs in Europe, and to have the new electric supply chains being in France and in Europe.
Minister, on Air France KLM, when are you expecting this operation to be done by? How quickly does it need to be done by so that they can function like a normal company and maybe take part in M&A?
It's up to Ben Smith to decide, and France is, the French state is one of the players that can provide support to Air France, but not the only one.
Minister, you're young. You're, lauded as one of the best finance ministers that certainly this country has had. Will you run for president next time around?
For the time being, I'm supporting with all my heart and all my belief President Macron, because I think that France needs stability, and the foreign investors need visibility as far as the economic policy of France is concerned. And they can take for granted that if Emmanuel Macron is re-elected, we will stick to that policy which will improve the competitiveness of the French companies and improve the attractiveness of France.
So you're not saying no? We'll see.
We'll see.
Is it fair to
You know the sentence by Shakespeare. If you can look into the seeds of time and say which grain will grow and which will not, speak then to me.
Minister, thank you so much for that. Also, a little bit of literature on a Monday morning doesn't hurt anyone. The French Finance Minister, Bruno Le Maire. Now, coming up, we'll, of course, continue our preview of the French presidential election. We'll dig into the polling data with Henri Wallard, Deputy Chief Executive of Ipsos. Now, let's check in on the markets with Tom in London. Hi, Tom.
Hi, Francine. What a great interview. No more tax or more tax cuts, no more austerity for France. That was a message clearly from the French finance minister there. In terms of how this is replicating at least the geopolitics and the continued focus on central banks through these European markets, an hour and a half or so into the trading session, you currently range bound across the stock 600. There is still so much uncertainty about what is happening around Ukraine, given that the Kremlin has come out with a statement saying we haven't locked this meeting down between the two presidents, Biden and Putin, despite the hard work of the French side and Emmanuel Macron. In terms of the future stateside, still looking at gains of 0.3%. The ruble remains stronger, currently at 76, and Russian equities taking a hit, again, on the back of that line from the Kremlin, pouring some doubt onto the question marks around that meeting. You had some stronger data coming through in terms of European PMI, particularly on the services front. Plenty more coming up. This is Bloomberg.
This is Bloomberg, France Decides. I'm Francine Lacroix here in Paris. Now, with under 2 months to go until the French presidential election, Emmanuel Macron remains a favorite to win. Polls show that the incumbent would actually beat any of his main rivals in a second round of voting, but the other likely candidate to reach the runoff vote is actually far from certain. A report from Ipsos puts Valérie Pécresse in second place, just slightly ahead of Marine Le Pen. But another daily poll actually indicates the preferences for far-right pundit Éric Zemmour are also rising. So joining us now is Henri Wallard, Deputy Chief Executive Officer and Chairman of Ipsos in France. Henri, thank you so much for joining us. First of all, how volatile are these polls?
Well, they are volatile because on one side there is a very close race between the three candidates which you just referred to, Valérie Pécresse, Marine Le Pen and Éric Zemmour. So that's in a way volatile because they are very close to each other. And as you mentioned, we published a poll where Valérie Pécresse was slightly ahead. But you know, as days and weeks go, this is a close race. This is the volatile part. Another one which is not so volatile is that we keep seeing Emmanuel Macron on the first seat, on the top place, with about 24-25% of the intent to vote, while the three I just mentioned, Valérie Pécresse, Éric Zemmour, and Marine Le Pen, are between 15 and 16%.
Yeah. So, I mean, I saw a number, which is there's an 80% chance that Emmanuel Macron gets reelected. I mean, given that we are February 22nd, what could happen from now until the premier tour on April 10th for Mr. Macron not to be reelected?
You are right. I think the anticipation, first by the voters, by the people we interview, is that clearly Emmanuel Macron will be in a position to run for the second step of the elections and as the highest chance to be elected. Then the scenarios are quite different in respect to who will be his challenger, whether it will be Valérie Pécresse, Marine Le Pen, or Éric Zemmour. In all three cases, when we ask now to people what would they vote, who would they vote for in the second phase of the election, we see that Valérie Pécresse stands a bit higher, and second would be Marine Le Pen, and third Éric Zemmour. But this could change in a few weeks.
Mm-hmm. Henri, given what we're seeing and actually the strength of the economy here in France, does Mr. Macron just wait it out? He hasn't even officially said he wants to become president again. Is there a strategy, or does he just, sit back and just watch the economy to get the votes?
I think there is a deadline. Is that he needs to run for president again before March the 4th. So what clearly happens here is that there are many events, including the international crisis in Ukraine. So a lot of people think that he's actually waiting for the right time to announce his candidacy, but it's very likely it will happen very soon.
I know that we've seen Mr. Macron, and you can hear it on the news. A lot of people are talking about, of course, the French diplomacy, the fact that he's calling the other, of course, world leaders to try and make this happen. Is this good for the polls? Is this all a calculated risk in saying, he puts France in the spotlight, bringing back the glory of France that maybe it had 200 years ago, and this will get him votes? Or is it just because he really believes in this?
There is a strong belief that this is, of course, positive because, running the show, being, a leader, dealing with leaders around the world on an international crisis is in a way, reinforcing the image and the status of being president. But we should not forget that right now the main concern the citizens express in this country is about purchase power and social issues and economy. And actually, purchase power and economic issues have been, surpassing the COVID, which is fading away, and also even environment, which is not so strong in the terms of concern from the people. So yes, the crisis can help, but dealing with purchase power and poverty and inequality would matter a lot for the voters.
Thank you so much for joining us. Henri Wallard, there, Deputy Chief Executive and Chairman of Ipsos here in France. Now, we'll have plenty more, of course, from Paris throughout the day. Also, some other great guests coming up. We'll be speaking monetary policy and interest rates with the former ECB President, Jean-Claude Trichet. Don't miss that conversation. You can send in your questions on IB plus TV Go. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now, joining us to talk, of course, about the economy, interest rates, inflation. We're joined by the president of the Trilateral Commission. He is Jean-Claude Trichet from 2003 to 2011. Monsieur Trichet was the president of the European Central Bank, where he oversaw, of course, the ECB's response to the European debt crisis. Now, before then, he was the governor of the Banque de France. Jean-Claude Trichet, welcome to Bloomberg. As always, a lot of talk, of course, about inflation, a lot of talk of especially inflation in the U.S. driving up markets expecting a lot of Fed rate hikes. What's the repercussion, the read across, Mr. Trichet, of that inflationary pressure? Are we importing inflation from the U.S. into Europe?
Well, thank you very much indeed. It's a pleasure to be with you, Francine. I would say that Europe, fortunately, is not exactly in the same position as the U.S. We really have a level of underlying inflation, core inflation, which is significantly lower than in the US. For instance, it is 2.5% in the euro area when it is 6% or something in the US. So we are in a different universe, clearly. And the inflation expectations in Europe are, I would say, more or less much better anchored than in the US. That being said, of course, there is a great similarity between the US and Europe and the euro area. First, inflation is there after having disappeared during 10 years or 12 years. And second, we have the same target as regards the, I would say, definition of price stability, the medium-term inflation, which is 2%. That's the similarities.
But, Monsieur Trichet, how complicated is it, because we didn't really foresee this kind of sticky inflation, given the elevated prices also for oil and gas, how difficult is it going to be for the central bank to deal with inflation whilst at the same time safeguarding economic growth?
Well, first of all, what is very, very important is to stabilize the medium, long-term inflation expectations. If you lose the stabilization of medium and long-term inflation expectations, you lost, because the second round effects will multiply, I would say, the impact of oil, gas, and commodities. And so there you're lost, clearly. If you have great and big and significant augmentations of wages and salaries, as is the case in the US, then you are in a bad situation. At the moment I'm speaking, it's the main problem, I would say, for the European. Avoid the second round effects that would, of course, create lasting inflation. At the present moment, it is the main task of the ECB.
Yeah, which means what, Mr. Trichet? So if you look, for example, at Fed expectations, JP Morgan economists were the last ones in expecting, I think, 7 hikes this year of 25 basis points. Theoretically, does it make more sense to deal with this kind of inflation, to go large, so to go 50 basis points, even 75 basis points, and then wait and see for the second half?
All remains on the credibility of the central bank. The Fed had at a certain moment given the feeling to market participants that they were underestimating inflation, and therefore there was a risk of destabilization of the expectations. Now they clearly said inflation is not only transitory, we have a real problem, and we will take appropriate measures to I would say, cope with this real problem. And that is good because it reinforces the credibility of the Fed, in my opinion. Of course, it might have impact on the market in the short run, but the problem of the central bank is to deliver in the medium run, not to follow, I would say, emotions on the market permanently.
But, Mr. Trichet, so do you expect actually, what's a policy mistake nowadays? Is it increasing by too much and then having to cut interest rates, or is it not increasing by enough?
Again, the Federal Reserve said, and it seems to me that it was said also by Christine Lagarde in Europe, we are deciding, taking into account the data, taking into account the facts. And amongst the facts, you have both, I would say, the immediate observation and the expectations and the medium-term expectations as regards inflation expectation. So I would say I have great confidence in the central banks. I mean, they proved over the past that they were able to cope with extraordinarily difficult situations. So my understanding is that it is very likely that they will do what is necessary, again, to stabilize inflation expectations on both sides of the Atlantic, even if, I would say, as I already said, of course, the danger are not the same, and the present situation is not the same on both sides of the Atlantic.
Apart from inflation, Mr. Trichet, what do you think is the biggest concern, actually, for the French economy?
I would say we have positives and we have negatives. Positives, growth, diminishing of unemployment, and structural reforms that have been made over the past years, labor market flexibility and so forth. But we have also negatives. We have the public spendings as a proportion of GDP that are very high. We have the debt outstanding, public debt outstanding as a proportion of GDP, which is high. We have a problem of cost competitiveness in the country, which is signaled by the deficit of the current account, which is quite substantial in comparison with the other European countries, not with the UK or the US, but with the other European countries. So that's a real problem. And I am, I would say, saddened to see that the debate is on augmenting the wages and salaries, augmenting the revenue and costs.
Yeah. Thank you so much. We'll have plenty more, of course, from Jean-Claude Trichet. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
It is 10 a.m. in London, 5 a.m. in New York, 6 p.m. in Hong Kong. I'm Tom McKenzie. Welcome to Bloomberg Markets. Our top stories today: Russia says there are no concrete plans for a summit between President Vladimir Putin and US President Joe Biden. That's hours after the White House gave in-principle support for such a meeting. EU foreign ministers are meeting in Brussels to discuss the tensions at the Ukrainian border. Living with COVID, the UK is set to announce the end of restrictions a day after the Queen tests positive. And the Credit Suisse woes continue. A new report says the bank managed accounts for clients involved in human rights abuses, corruption, and drug trafficking. Okay, let's check in on the markets then. 2 hours into the European Open, it is, of course, President's Day stateside, so you'll not be getting any action across the markets in the US, but the futures stateside, the last time I checked, were looking positive. Here in Europe, you're seeing losses of 0.2%. That's despite the fact that the Open, they came out strongly on the back of the reporting that you were going to get this meeting between Biden and Putin. Then the Kremlin came out and said, poured cold water on that and said, this hasn't been locked down yet. That's led to some pairing of some of those gains, now down 0.2%. Euro dollar is still up 0.3%. We had some data that came through, particularly services PMI, that was stronger, suggesting that the economic recovery in Europe continues. We're looking ahead to the March the 10th meeting for the ECB. When we get more clarity, the expectation is, of course, in terms of how they wind back some of their asset purchases and what it means for rate hikes. Markets now pricing in a rate hike by around December of this year for the ECB. The Bund, as you can see, up 2 basis points in terms of the yield that we're seeing here. So a bit of a sell-off when it comes to the safe haven German Bund. And Brent currently gaining 0.3%. It was lower, so that's changed again on the back of some of these comments that we've had out of the Kremlin. The uncertainty around the geopolitics and the macro front and the central bank front. You do have this call from JP Morgan that you could get 9 hikes from the Fed, 25 basis points per time. That takes us up into 2023. That's the shape of markets then, 2 hours into your European trading day. Let's take a look at what is ahead this week. We're going to get European bank earnings from HSBC and Barclays. UK Prime Minister Boris Johnson, as we mentioned, is planning to scrap self-isolation rules for people in England who test positive for COVID-19. We're going to get US retail earnings for Macy's, Lowe's and Home Depot, and Alibaba reporting its earnings results on Thursday. That, by the way, just after we got a line earlier today on the back of banks in China being told to check their exposure to Ant Financial, which of course is owned by Alibaba. Let's get back to the big geopolitical story of the moment then. And our top story, Russia says there are no concrete plans for a meeting between the two presidents, Vladimir Putin and US President Joe Biden, of course. That's just hours after the White House said it had agreed in principle to a meeting to resolve the standoff over Ukraine. Bloomberg's Maria Tadeo is in Brussels, where Europe's foreign affairs ministers are meeting. Maria, just get us up to speed on the back and forth over this summit that was engineered by French President Emmanuel Macron.
It was indeed by Emmanuel Macron, and we've seen the French president, frankly, really hitting the phone all day on Sunday. He did have two calls with Vladimir Putin, one of them taking place at 1 a.m. in the morning, Moscow time, and then, of course, back and forth with European allies and the U.S. Now, coming out of these phone calls is this pledge for a meeting between the two. Of course, now the Russians are saying it would be premature to put a date on this or to, frankly, organize the details of a meeting between the two leaders. But a lot of this, which may be interpreted by the market as big whiplash today, it does seem, however, like the usual modus operandi of the Russians, in which first they send Sergei Lavrov to test the waters with Antony Blinken, and then they go into the details. So I wouldn't rule out there is a meeting or that a meeting will happen. Of course, it is, or it does pour some cold water into the headlines coming out of France, but in many ways, this is the way that Russia tends to operate. First, you do the prep work with Lavrov, and then you take it over to Vladimir Putin.
Yeah, indeed. You're talking about the whiplash in the markets. You're sailing Russian equities down almost 3% on the back of this move. It's very difficult to pin this down. And, of course, we had the warnings over the weekend towards the end of last week. President Biden saying that as far as he's concerned, the intelligence he's seeing suggests that Putin has already made his mind up. What are you hearing from foreign affairs ministers then on the ground in Brussels? We heard from the French finance minister speaking to Francine Lacroix earlier saying that, look, these sanctions will be tough, but not giving any details at this point.
They're not. And, you know, this is something we've heard now for weeks, that if there was to be an invasion, the European Union, but also the United States would come up with a super severe and swift package. Boris Johnson also yesterday saying that this would open up the Russian doll of all sanctions. But when you look at the detail, this is really where the debate is at today, Tom. And I've been here all morning with this foreign ministers meeting happening at this point, and you do see big divisions now between some of the big European countries that say we have to be ambiguous and keep the Russians guessing. And then, of course, the Baltics, which are very much connected to Russia, and they say we know the Russian tactics. At this point, we should have already triggered preventive sanctions. They also say that this opens up a very dangerous debate. What is an invasion? We know that over the weekend, we had reports of more than 2,000 violations of the ceasefire in the Donbass region. So there's a lot of concern that perhaps we're not going to see an open declaration of war, that this is going to happen in a way that's much more subtle and will come in the form of cyber attacks, but also attacks in the Donbass region. So a lot of the smaller, perhaps Eastern European countries suggesting that this is time for the West to open up their eyes in a way the invasion has already started.
Okay, Bloomberg's Maria today on the ground in Brussels with the debate there, the divisions amongst European leaders and European foreign affairs ministers on how hard and how severe to go with these sanctions. Let's bring in Pooja Kumra now, Senior European Rate Strategist at TD Bank. Pooja, good morning, and thank you for joining us. Just to what extent do these geopolitics muddy the waters when it comes, and let's start with the Fed, when it comes to the Fed and their decision-making about the rate hike cycle?
Good morning. Yes, I think markets have been actually having a hard time actually putting whether it's the war or whether they have to listen to the central bank members. I don't think so far we've got any pushback from central bank members, especially we heard Bullard last week, and war is definitely negative growth, but it is also inflationary. So we would expect the March hiking cycle to go through. How much they can hike further out is definitely something that can be questioned. And also, if things do get materially bad from here, touch wood not, we could actually see markets getting back of the 50 basis points hike, at least that is being priced in. But I think 25 basis points hike, both from a Fed as well as BOE, seems pretty much likely, as we've got no pushback and inflation remains one of the key aspects that they need to actually give markets more confidence with respect to credibility.
Oh, so, okay, to be clear, you see a 25 basis point move in March then from the Fed. If we were to get a 50 basis point move, what would the impact be across risk assets?
Just to clarify, we are with the markets looking for 50 basis points hike, but I was just saying that in case we do see things materially deteriorating, we could see a 25 basis points hike. And in terms of market reaction, definitely we could see a bit of a rally, just given the fact that 2 years has sold off a lot, with markets pricing very hawkish rate hike expectations across central banks. So what we could see is that, again, the 2 stance curve steepening, just given the fact that markets push back rate hike expectations for the year. So they get more pushback into 2023. So I think it could mean that they are more spread out with respect to rate hikes, but I don't think markets will remove much of rate hikes from 2022.
And JP Morgan coming out with this call that you're going to get 9 consecutive hikes, 25 basis points is what they're looking at, 9 consecutive hikes taking us into 2023. Does that seem overdone to you?
I think as a bank, we are also looking for almost 175 basis points hike in 2022 and actually 2 hikes in 2023. I think in terms of fundamentals, both the economy is at a very good state. Like the data so far doesn't show that this transitory phase will get over anytime soon. Again, like after 6 months, if we do see some reduction in terms of the inflation pressures, we could see less hiking taking place in 2023. But I think in terms of 2022, we would see an active Fed. And that is the message that we have got through them in the last couple of meetings. We know that this week we will hear from Mester as well as Bostic. So that will give us more insight into whether markets should actually place their bets on 25 basis points or 50 basis points. But I think after that, it will be a bit tricky, just given the fact that Fed does go on its blackout period.
Okay, and you talked about the inflationary impacts of the geopolitics, and if indeed we did get an invasion of Ukraine by Russia, we know we're going to be looking at commodities and metals and, of course, the energy space, oil and gas. When that factors in, and that becomes factored in for the ECB, how do you expect that central bank and Christine Lagarde to be weighing up the economic impacts on an economy that the data suggests continues to hum along pretty well versus the inflationary shock that could come about as a result of that kind of impact and that kind of action?
Definitely, Europe remains in the sweet spot. In fact, I think ECB members have highlighted their concern regarding the geopolitical situation. We have not seen that kind of concern from Fed members, which is understandable given how much we depend on Russia. I think in terms of what the ECB's message has been also in this last couple of weeks is that they want normalization of policy and not tightening. And that's what they will follow. They will try to give proper guidance to market to just suggest that they are trying to anchor inflation expectations and not try to be too aggressive with respect to hiking, just given the fact that they know that growth will be negatively affected. But they still need to have the credibility with respect to the inflation numbers that we are seeing. And we could possibly see another big inflation data release in March ahead of the meeting. So I think they will be careful. Again, they will be more, they will try to give us a better guidance. Right now, markets have no guidance from them whether they are ending APP, when are they hiking. So I think they will give us a proper path that should reduce uncertainty. And I think with respect to markets pricing aggressively hikes for ECB in June, July, that definitely is something that we don't really understand, given the fact that they do have to end QE and only shortly after they will start hiking rates. And ECB is a central bank that gives us a lot of notice. They believe in gradual pace and we trust them. So I think if things deteriorate in the geopolitical situation, markets will definitely push back the December hike to March. But I think where we are sitting here with respect to Europe is basically gradually ending QE and setting the path for rate hikes. And that could be a small rate hike in December.
Okay, so possibly December for the first rate hike. It would be modest, and you still trusting in Christine Lagarde and the team at the ECB, despite that turnaround in terms of the more hawkish sentiment that we got earlier this year. When it comes to Italy and the focus there, the pressure point when it comes to the spread of Italian bonds over German bunds, we're closing into 200 basis points. We're closing into 2% on the Italian 10-year. Where do you think the pain level is for the ECB when they're forced to step back in and offer some kind of support to the Italians and the other peripherals?
Yeah, I think markets have reacted violently after the ECB meeting, and that's why we are seeing the pushback from the members, because they're also I think it wasn't fair what ECB did in the meeting just because we had a guidance that was given in December. I think right now, what they can do is they want to end all their measures in a very systematic way without tightening financial conditions. So even if PEP ends, we have PEP reinvestments that can be used to actually tighten any fragmentation and spread. So I think in terms of levels, I do feel that further widening in spread is technically limited. We could see ahead of the March meeting, but in concept, the fundamentals in periphery have improved incredibly. Even during the crisis, most of them got upgraded. They have financing from the NGO funds, so which reduces their funding needs for the year, not only this year as well as the coming year. So I think in terms of fundamentals, we are very different from what we saw during Euro crisis in 2011-12.
Pooja, just before we let you go, what's your favorite trade at this point?
Right now, I am actually like holding in terms of the front end, whether it's in Euro or UK, just given the fact that I feel markets have pricing way too much. So I think buying the December futures just because it's too much priced in terms of rate hikes. So I think that is my key trade right now. And I think that is a good hedge, even if there's anything that happens with respect to Europe as well as Russia war. If there's any geopolitical stress, I think that those trades are the ones which will perform. 10-year will remain more delicate because we are entering the QT phase as well.
Okay, great stuff, great insights. Pooja Kumra of TD Bank, thank you. And coming up later in the hour, Tobias Ellwood, the UK Conservative MP, joining us at 10:30 a.m. London, that's 5:30 a.m. New York. We'll discuss all the geopolitics with a Member of Parliament who is steeped in the insights of foreign policy. Stay with us, this is Bloomberg.
Going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Markets. I'm Tom McKenzie in London. Now let's switch focus to France. The French Finance Minister Bruno Le Maire spoke earlier with Bloomberg's Francine Lacroix about France's role in easing Russian aggression. Take a listen.
Politics and geopolitics is really dominating, with a huge, forceful role that France is trying to play in trying to ease the tensions. First of all, Minister, what kind of impact would sanctions on Russia have on the French economy?
It would, first of all, have a very deep impact on Russia, on the Russian economy and on the Russian interest. But it's time for de-escalation. It's time for diplomacy. And there has been a major breakthrough last night, thanks to the efforts made by President Macron. There is the possibility of having a meeting between President Putin and President Biden. The two leaders agreed on the principle of a meeting. And I think that we should all make the best efforts to make this meeting a reality. Once again, President Macron played a key role to trigger this meeting between the two leaders.
So again, you put all the efforts diplomatically. If it doesn't work, what kind of sanctions should we be looking at?
I don't want to give too much details on the sanctions, because if we want the sanctions to be efficient, we have to trigger the sanctions when it's time to trigger the sanctions. But one point must be very clear. If there is any attack from Russia to Ukraine, we have a set of sanctions that are still available and that would hit the Russian people, the Russian state, and the Russian economic interest.
How long do you think these elevated prices for gas and oil will stay? And how much pain is it? If it's a year, how much more subsidies can you put in place?
I think that everybody must be aware that till there are some geopolitical tensions in Ukraine, and taking into account the fact that there is a very strong economic recovery in the United States, in Europe, everywhere in the world, which is quite good news for all of us, we will have to face an increase in energy prices.
And that was the French Finance Minister Bruno Le Maire speaking exclusively to Francine Lacroix on the ground in Paris. Let's cross over now to Francine and bring her on in at this point. It was a great interview, Francine. There was so much that you went through with the finance minister, and so many great lines that came through, whether it's on the subsidies around energy, around sanctions, of course, for Russia that are being lined up, and really pushing back on the idea that you're going to get austerity anytime soon from the Eurozone. What really stood out for you at a point when, particularly when we count down to the French elections, and when France and Macron seems to be trying to play at least an oversized role on the geopolitical stage?
Yeah, so first of all, Tom, I was really struck by the fact that the minister thinks that by taking on this geopolitical role, it actually helps with visibility and could be a bonus as Emmanuel Macron tries to go for re-election. Remember, he hasn't said officially that he's going for re-election. He still has a couple of weeks until he announces. But actually in the polls, he's really way ahead of anyone else. There's an 80% chance that he gets re-elected for a second term. So that stood out simply by the fact that, by playing this international role, which I know many times we've said in the UK and the US just does not work for presidents or prime ministers. It's interesting that in France, they're still attached to, the idea that France has the glory of bringing countries together. The other thing that stood out is, of course, this extremely difficult tension. On the one hand, you're giving subsidies, so you need to spend money, Tom, to make sure that actually the people are not suffering too much if energy prices go 30%, which is why the French government, of course, capped that increase at 4%. But at the same time, they're also saying that they want to keep an eye on debt and, of course, the budget deficit. And if this lasts for much longer, let's say 6 months, 7 months, 8 months, and the minister there said that he was ready and is standing ready to act to make sure that there are subsidies for as long as they're needed, then it's going to be very tension on the markets, with maybe bondholders looking at what this means longer term for French debt.
Indeed. Thank you, as ever, Bloomberg's Francine Lacroix on the ground in Paris. This is Bloomberg.
announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back. This is Bloomberg Markets. I'm Tom McKenzie, now keeping you up to date with news from around the world. Here's first words with Leanne Gerrans. Leanne.
Good morning, Tom, and thank you. The Kremlin is casting doubt on earlier statements from Washington saying there are, quote, no concrete plans yet for a summit between Presidents Biden and Putin. France had also reported a deal had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it doesn't intend to invade Ukraine, but U.S. officials say they have intelligence showing that Putin has already given the order. Now, more trouble for Credit Suisse. A new report says the bank managed accounts for clients involved in human rights abuses, corruption and drug trafficking. That's according to leaked data on more than 18,000 accounts that together held more than $100 billion. The New York Times says the data covers accounts opened as far back as the 1940s. Credit Suisse rejected the allegations and said they were largely historical. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Leanne, thank you. Plenty more coming up. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back. This is Bloomberg Markets. I'm Tom McKenzie. Let's check in on the markets then. We woke up this morning, certainly here in the UK, and looked at headlines suggesting that there was going to be a meeting between Presidents Biden and Vladimir Putin. And then you had the Kremlin coming out saying they have no concrete plans for such a meeting yet. So you had some risk reversal in terms of the market action across the equity space. Here in Europe, the Stoxx Europe 600, the benchmark is down 0.5%. Euro-dollar is higher by 0.3% at 113. The 10-year German Bund yields are higher, a bit of a sell-off in terms of that benchmark, currently at 0.21, close to 0.22 for the 10-year German Bund. And Brent is higher just by 0.1% at $93. Futures stateside, it's President's Day, so markets are not trading, but when they do, futures are pointing to losses of about 0.2% on the NASDAQ, and you're range-bound on the E-minis S&P futures. That is the state play across these equity markets. Let's get back to the geopolitical story then, of course, of the moment. The Kremlin saying that they do have those lack of concrete plans, at least for the moment, for this summit. So throwing cold water, arguably, on the attempts by Emmanuel Macron of France to get the two presidents together to try and find some kind of solution. So that question, that proposal now in question. Let's bring in someone who has deep insight into the geopolitics of Ukraine, of Russia, and certainly the attempts by NATO and the West to fend off what many see as aggression from the Russian side. And of course, it's worth noting that the Russians have consistently said they have no plans to invade Ukraine. Tobias Ellwood, UK Conservative MP, and importantly, Defence Select Committee Chair. Tobias, we sit here this morning and we try and read the tea leaves on whether or not we will get a meeting between the two presidents. What is your assessment of where we stand? Some have suggested that this attempted invasion has arguably already started by the Russians. What is your assessment with the data, with information at your disposal?
Yeah, that's a very good question, and everybody is guessing as to where this is going to go. I'd just like to make the wider point. I think it's important to place this into context of just how unstable our world is becoming. The threat from extremism aside, on a state level, we've actually had a relatively peaceful few decades. But for those of us who remember the Cold War, we know how fragile our peace is. It requires defending. It requires the West to act as one and to be resolute. We have a duty, therefore, in my view, to explain to a new generation who understandably may be questioning, why we should be getting involved, perhaps, in supporting Ukraine, the long-term consequences of us perhaps doing too little at this moment. The threat of war in Eastern Europe looms large, with huge consequences for security across the continent. Oil and gas prices will jump if an invasion takes place, as will food prices as well. And we're now seeing Russia follow a very familiar playbook in developing its false narratives, try and provoke Ukraine into a conflict. And don't forget, Russia, Putin himself, is actually enjoying the limelight here. So yes, he's. I'm not sure we should. How much we're going to get into this dialogue that's now been taking place with the president. Of course, we should continue pursuing all avenues, but from where I sit, I think an invasion is very likely indeed.
You've called for better statecraft, particularly from the UK. What would that look like in reality, in practice?
Good question. We need to recognize that Putin exploits weakness, but he actually respects strength. And if you've got Paris, Berlin, London, and Washington all looking in slightly different directions, not necessarily working together, particularly, let's say, on a strategy to handle Russia, not least in the energy sector, for example, then I'm afraid we're not going to be working as one. And don't forget, we have the most formidable military alliance ever assembled, and we've effectively decided to bench that capability rather than supporting a democracy that is under threat. You know, perhaps we're haunted and exhausted because of events in Afghanistan and Iraq, but place this into context. This is actually about preventing an invasion. This is supporting a democracy. It's stopping an aggressor from crossing a border. So from the international perspective, we need consolidated leadership. We need a direction of travel. We've had it. The Munich Security Conference the last couple of days confirmed a sense of purpose for those within NATO. But the challenge here is, what do we do about Ukraine? What do we do about Russia? And a rather bigger totemic question about this new alliance that seems to be forming in front of us between Russia and China.
Well, that's interesting. I want to get onto the Russia-China relationship shortly, but let me start with the question around energy, because you touched on this, the importance of insulating ourselves from the dependence on Russian energy. We're a long way from that, and certainly the Italians have made clear that they are concerned that if sanctions hit the energy sector, they and others will be impacted. The UK is not immune. What are you seeing in terms of the concrete steps being put in place here in the UK and by our Eurozone partners to build out some kind of defense around the vulnerability to energy?
See, this is exactly where the statecraft needs to come in. There is a natural reaction to say, when a country does something wrong, that we impose sanctions. But those sanctions, as you've just articulated, will hurt us as well. There'll also be a retaliatory response from Russia itself. And let's just get ourselves into the head of Putin himself. Where does he want to go? Why is he doing all this? In my view, he actually wants to tilt his country. I think he's made a calculation that he can't advance his own country growth-wise, because that would require reform that he's not able to do because it's so corrupt. Therefore, he wants to align his country with another country that takes a different view of the international rules-based order, also has a dislike for the West as well. The future from Putin's perspective is to align Russia with China. And therefore, if Nord Stream 2, for example, is cancelled, if any sanctions are imposed, well, there's a lifeline there looking east as well. We need to think this through. We need a wider, coherent strategy to stand up to Russia.
Okay, we know that President Xi Jinping over in Beijing will be watching this very closely indeed, the implications potentially for Taiwan. But we also know that the Chinese government, the Communist Party, dislike instability, whether that's at home or internationally. So how can we be assured that, in fact, Beijing is sitting comfortable with this? And how assured can we be that, in fact, that alliance is as strong as maybe some are suggesting, given the historical tensions that have existed between those two powers?
Well, I think China is also enjoying this relationship. China knows that in the next few decades, and they think in long term, they will become a formidable superpower economically, militarily, and technologically. And they don't like taking the limelight themselves. They're very happy, though, I think, for Russia and Putin to actually seek the international spotlight in the way that he does. So this is I think, a dangerous symbiotic relationship. It's a geopolitical transfer or transmission of power over the next few decades, and something that we've not really woken up to at all. It is something that the West needs to address, because I do believe that we are at a juncture, if you like, a turning point in our modern history. And what we do over the next few months and years and so on will determine how the next few decades play out.
What is the face-saving measure that we can give Vladimir Putin at this point when we look at the diplomatic path, however small and narrow that path now is?
Well, that's an interesting question. What is the off-ramp, if you like? How do we actually de-escalate this? I think the first thing to do is to show strength, to show sense of purpose. Like I say, we have an immeasurable capability. When you put all the Western countries together, our GDP is far greater than that of Russia and indeed China as well, as is our military power as well. But we're not working together as one. What we need to be able to do is de-escalate this by showing absolute sense of support for Ukraine. Then we can actually start to work out how we can ensure that the Russian people recognize that their future, long-term future, should remain looking west rather than to the east as well. These aren't easy questions. This is a very complex situation that we face at the moment. But right now, there is an acute pressure on Ukraine, and that's where our support should be. An invasion is quite likely, but there's much more we can do to provide military assets, military support, to make, if you like, Ukraine indigestible for any Russian invasion, that it'll be so miserable for Russia to take over any part of it that they will realize that this is the folly of what their intentions are. And that, I'm afraid, is the conversations that still need to be had by the West.
Okay, Tobias, I want to go from the complexities of the international arena to the complexities of the domestic arena and UK politics. You've made it clear in the past that you have questioned the leadership of Boris Johnson after the numerous scandals that he has faced. Do you think the UK Prime Minister survives on the back of his role geopolitically with the Ukraine crisis? What is your view currently on the abilities of the Prime Minister to lead this country?
It wasn't any particular event or incident that took place in number 10 that made me submit that letter. It was the absence, if you like, of that leadership that normally when other nations hesitate, particularly the United States, if it retreats back from the international stage, as we've seen it do, it is Britain that then steps forward. And what was clear over the last few months when we were able to peer inside number 10 is that there wasn't that statecraft that we would normally be able to exhibit, that convening power that can rally other nations to all look in the same direction. That is what I want to see. And that can only happen if you have the right people around a prime minister providing the appropriate advice, taking not only Parliament, but the nation with them as well.
Okay, Tobias Ellwood, UK Conservative MP and Defence Select Committee Chair. Thank you for your time, for your insights this morning. Coming up, Charlotte Ryland, CCLA Investment Manager, we're getting her calls on how to play these markets amidst this geopolitical uncertainty. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. Demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
Russell Hardy, the CEO of Vitol, there on that $100 prediction for oil. Currently Brent trading at $93 a barrel, down just 0.1%. And a line crossing the terminal around the geopolitics and update. We have the German Chancellor Scholz to speak, I should say, on the phone with Vladimir Putin later on Monday. That is according to a spokesman for the German Chancellor. We'll keep across, of course, that unfolding story through the next few hours. Let's get now to the market moves and how to position. Charlotte Ryland, CCLA Investment Manager, joins us. Charlotte, what is your assessment of the geopolitical risk? How much of this is priced into the markets, or how difficult is it to price in these geopolitics into these markets at this point?
I think, it's always incredibly difficult trying to predict precisely what's going to be happening, particularly with, the Ukrainian situation. I mean, it's had an impact on the oil markets. We can clearly see that. The fact that oil has moved sort of above sort of $90 levels. And if we do see an invasion and we do see sanctions coming in, then you would expect that sort of elevated level of the oil price to remain, at least in the short term. But, in terms of sort of the wider markets and actual companies, I'm not sure that actually the potential is going to have a very significant impact on a company's earnings, and therefore is not something that you particularly would need to position for beyond the oil price.
Okay, a call we've heard from a number of strategists is, in light of the tightening cycles that we're expecting from the Fed and other central banks and the geopolitical risk, two places to be are financials and energy. Do you concur with that view? Is there more upside for those two sectors?
I think for us, the oil price has moved a long way already. I mean, it was back down at sort of $30, back down in the depths of the pandemic, and it's already moved, back to pre-pandemic levels. So for it to move up further, I think you'd need to see a very dramatic increase in demand. And yes, we're going to see travel coming back online, but a lot of that reopening, I think, has already happened. And of course, what we're not talking about there is supply, and supply can come through. I mean, particularly US shale can increase production. OPEC can produce more than they are. So, for us, we think, at $90, that's certainly incentivizing oil companies to come in and start increasing supply. So we wouldn't expect the oil price to be, continuing on that very strong upward path that we've seen so far. And then in terms of banks, I mean, clearly what the bank market's pricing in there is interest rates moving up and net interest margins moving up. I would say that a degree of that is already priced into the bank valuations, certainly on sort of premiums book in the US. It's less so perhaps in Europe. But then, of course, in Europe, there's probably less tightening to come. That's only the ECB has been certainly much more dovish than the US.
And that takes us to your call that you're cautious, and you make a point of saying that you're cautious on the rotation into growth, and that is around valuations.
Yeah, I mean, I think it's going to continue to be a difficult market in terms of valuations. We are now in a tightening cycle. We can debate how much the central banks are going to be tightening, but certainly that sort of very easy period we've had over the last decade of very, very loose monetary policy does seem to be coming to an end. So I think, people have to be careful about what they're paying for stocks. But equally, we wouldn't say that this is the time to go and try rotate into very low multiple stocks, where actually the earnings for those companies are still looking quite vulnerable. So we don't think we're in a cyclical boom, so we wouldn't rush into cyclicals. We wouldn't want to buy companies with weak balance sheets, because if rates are going up, that's not going to be great for them. And you want to be really make sure you're focused on companies that can cope with a more inflationary environment, which have decent gross margins, which have got pricing power. And that sort of points you much more towards the sort of quality end of the market than the sort of deep cyclical value end.
Okay, quality and pricing power, key as we look ahead. We had a line from Citi last week suggesting that the rotation from US equities into global equities may be just beginning and just getting started. Do you have a regional preference? What is your regional preference at this point if as some would argue, valuations in the US are looking a little choppy?
I think it's, for us, we don't sort of make regional calls. It's much more based on, the actual underlying companies and, not being particularly driven where they happen to be quoted. It's about actually what's the business. But, yes, in the US is clearly being dominated by some of those big technology companies. I think there has been some overvaluation within tech, and we've seen a lot of those sort of zero-profit tech companies really have a very, very poor start to the year. But that doesn't mean, I think, that all technology companies are overvalued, and there isn't, still a great interesting growth story for some of those companies. So some of the cloud stories, some of the semiconductor stories, still look reasonably compelling. And if you can find those on reasonable valuations, which in some cases you can, we still think that was an area of interest.
Anything in credit markets you like? We've seen high yield and those spreads starting to widen, but historically, of course, still for many in something of a comfort zone. Is there anything within credit that is drawing your eye at this point?
For us, we're still very cautious on the bond market in its entirety. So, and I think if we do move into the second half of the year and economic growth begins to slow a little, and if you do begin to see some companies begin to struggle with the inflation environment, you'd have to be watching your eye on some of those credit numbers as well. So generally for us, we don't think bonds are that attractive even now.
Okay, steer clear of bonds still. Thank you, Charlotte Ryland of CCLA, for those insights. We appreciate it. Coming up next hour, Joost Beaumont, ABN AMRO Senior Fixed Income Strategist. We'll be getting more calls within the fixed income space. I think that Joost has a different opinion to Charlotte when it comes to opportunities or not within fixed income and the bond market. Stay with us. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. This is Bloomberg Markets. I'm Tom McKenzie. Let's get to the tech sector in China. We've had some news, a flurry of announcements from officials over the last few days. Concerns in Beijing may roll out more restrictions for the tech sector. That's weighed on Chinese markets overnight after a new policy on Friday to curb services fees for delivery companies. Meituan was particularly badly hit. Bloomberg Markets reporter Justina Lee joins us now. Justina, what do we know about these additional measures that officials in Beijing are putting in place and where we stand in terms of these tech regulations?
Right. I mean, the latest headline today is my colleagues reported that China is asking banks and SOEs to report all their exposure to Jack Ma's Ant Group. Now, it's not really clear what prompted this action, but it's reportedly, the most thorough investigation kind of in this regard. And so that's kind of hitting Chinese tech stocks, again today, just when everyone thought, can you even get more pessimistic on Chinese tech stocks at this point?
And it had been quiet for the last few weeks, the last couple of months, arguably, in terms of the flurry of actions from Beijing to kind of rein in the tech sector. And there's been some debate amongst China watchers as to where we are in this, and maybe some coming out even suggesting maybe it's a time to buy Chinese tech because possibly we've come to the end of this. This seems to be a reminder that they are far from done.
Right, exactly. And it's not just the news today. You said just then the last week there was the report that China's concerned about the food delivery fees. And also we've also heard kind of this report that China's also concerned about illegal fundraising activities regarding the metaverse, and that's kind of been an area that Tencent has really focused on. And kind of on top of that, Tencent was also hit by this online rumor that there is going to be another crackdown, targeting it. And actually, the PR had to come out and say that that was not true, which is quite a rare action from, a big Chinese tech company.
I love the fact that they're getting into Meta already in terms of the officials already lining their sights up on the moves into Meta. And as you say, the exposure that Tencent has to that evolving space. And they, of course, cracked down on crypto. They crushed that industry in China. Now they're turning their sights on Meta. Do we have any sense of where this goes from here? We saw Meituan dropping, 18% on the back of these moves on Friday.
Yeah, it really is a reminder that China has not relented in terms of cracking down on risks, even though a lot of people are saying, they really should be focused on bolstering economic growth right now. And it's pretty remarkable because I saw this line in a report from Bloomberg last week that actually now the valuations on a company like Alibaba is even lower than like a utility stock in Hong Kong. So that just really shows you how pessimistic investors have gotten. But it kind of really is still an open question whether that discount kind of warrants investors coming back in at this point with such a cloudy outlook.
That's a remarkable stat, isn't it? We've got the earnings for Alibaba coming out shortly, I think later this week, which will give us some clarity on how that company stands. And we know, of course, that they're trying to invest, Alibaba and others, to align themselves with the policy direction of Beijing. And there's been some arguments from some of the investors we've had on the show saying you've got to look at the hard tech part of this universe and try and avoid software. Is that the clarity that we need? Is it all about investing in things like semiconductors and AI?
Right, because obviously we've seen kind of this global chip shortage, and we know that the priority of China right now is also to kind of boost those parts of the economy rather than just kind of let these software firms grow, bigger and bigger. And so it really seems like investors are kind of struggling to find the bottom here in terms of these software stocks that used to be, their absolute favorites.
Justina Lee, as ever, great insights. Thank you very much indeed in terms of the evolving regulatory picture for China and the impact on companies like Alibaba and Meituan. Your markets here in Europe currently down by 0.5%. Stay with us. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
It is 11 a.m. in London, 6 a.m. in New York, and 7 p.m. in Hong Kong. Welcome to Bloomberg Markets. Our top stories this Monday. Russia says there are no concrete plans for a summit between President Vladimir Putin and US President Joe Biden. That's hours after the White House gave in-principle support for such a meeting. EU foreign ministers are meeting in Brussels to discuss the tensions at the Ukrainian border. France's economy minister says sanctions against Russia remain on the table, but won't say if they will include energy. In an exclusive interview with Bloomberg's Francine Lacroix, Bruno Le Maire indicated Europe must look to be more independent in the long term when it comes to energy. And living with COVID, the UK is set to announce the end of restrictions. That's a day after the Queen tested positive. Okay, let's check in on the markets then. How do you position when the geopolitics are so difficult to pin down? We had the statement earlier, the reporting earlier that suggested the French had managed to engineer a meeting between the two presidents of the United States and Russia, and then Kremlin coming out saying, no, not too fast, not so fast. We haven't locked that down yet. We have no concrete plans at this stage, according to the Kremlin, for that meeting between Putin and Biden. Watch this space in terms of the developments. We know that Olaf Scholz of Germany, the Chancellor, will be having a phone call with Putin later today. That's according to his spokesman, at least. So a leg lower in terms of what you're seeing across the benchmark by 0.5%. It's President's Day, of course, stateside, so the markets there are not trading. Euro-dollar, and you're still seeing elevated levels in terms of euro-dollar at currently at 113.58, up 0.3%. We're looking ahead when it comes to the central banks to March the 10th. That's when markets and investors are looking for clarity from Christine Lagarde and the team at the ECB in terms of the pace of reductions of asset purchases and where that leads us in terms of rate hikes from the European Central Bank. In terms of the German Bund, you're seeing yields up by 2 basis points, currently at 0.21. And Brent is range-bound now at $93 a barrel. We had the Vitol CEO speaking to Anna Edwards of Bloomberg and saying that $100 will happen. That is just going to happen, according to the Vitol CEO. But again, the geopolitics will play into any continued elevated prices when it comes to Brent. And of course, we know that OPEC Plus has struggled to get additional supply onto the markets. Now, let's take a look at what is ahead this week. It's back to earnings after today. We're going to get European bank earnings from HSBC and Barclays amid what many expect to be a higher rate environment. UK Prime Minister here in Britain, Boris Johnson, plans to scrap self-isolation rules for people in England. We're expecting to hear from the Prime Minister later today. That is for people who test positive for COVID-19. Those regulations will be removed. And we're going to get US retail earnings from Macy's, Lowe's and Home Depot. How strong, how resilient is the US consumer? Alibaba over in China reporting its earnings results on Thursday after its unit Ant was told, at least the banks were told, to check their exposure to Ant Financial. And on Friday, we'll get some US data, including personal income and personal spending. Let's get back, though, to the top story of the morning. Russia says there are no concrete plans for a summit between Vladimir Putin and US President Joe Biden. That's just hours after the White House said it had agreed in principle to a meeting to resolve the standoff over Ukraine. Bloomberg's Maria Tadeo is on the ground in Brussels, where Europe's foreign affairs ministers are meeting. Maria, the latest line then that Olaf Scholz will be holding a phone call with Vladimir Putin later today. What is the latest? What are you hearing on the ground in Brussels from foreign affairs ministers as they try to align and coordinate on the response to Russia?
Well, Tom, there's two things that are really the focus of this meeting happening in Brussels. One is what to do with the sanctions. And we have seen that Europe has repeatedly said we're closely aligned with the United States and sanctions will be severe and swift, but there's still a lot of speculation as to what they could entail, particularly when it comes to the energy sector. We've also seen from a number of countries. I recently spoke to the Lithuanian foreign minister, and he said, well, we believe that preventive sanctions need to be triggered now. Russia is already attacking Ukraine in many ways. The other issue, of course, that is still very much dominating the agenda here is that meeting between Vladimir Putin and President Joe Biden. Now, the Russians are saying not so fast. That has, in many ways, turned the mood a little bit downbeat this morning. But what I would say, and I would point to the words of the Ukrainian foreign minister, is that diplomacy is still open. And in many ways, it does make sense not to put a date on this meeting. Remember, Tom, on Thursday, the U.S. Foreign Secretary and, of course, the Russian foreign minister will meet face-to-face. So you could argue a lot of this is prepping the work before a date is given. It doesn't mean that this meeting is not going to happen.
Yeah, that's important, isn't it? That important detail around the prospects of a meeting. And, of course, the two foreign ministers coming together, Lavrov and the Secretary of State Blinken, to possibly lay the groundwork, as you say. When it comes to the question of energy, Maria, and I know you've been working through this for weeks, for months, arguably, and the implications for Europe and how it leads to divisions or not amongst European leaders. We've had the Italians coming out making it clear that they're pretty concerned about sanctions, any potential sanctions hitting the energy sector. We spoke to Tobias Elwood here in the UK earlier. He said there are divisions in Europe. We need to be more unified. What is your take on where things stand when it comes to the peace on energy?
Well, this is the thing, Tom. We're in the winter. This is a time of the year where Europe is the most exposed, but also vulnerable to changes in supply when it comes to gas. Over the weekend, the head of the European Commission, Ursula von der Leyen, she said that Gazprom was acting, quote, in very strange ways. That Russia's reputation as a reliable partner had already taken a big hit. But of course, when you look at countries like Italy, as you alluded to, of course, there's reasons to be concerned. We know that bills are going through the roof across Europe. This is a big domestic conversation, by the way, happening in Italy. What to do with these bills and how do we bring them down? The reality is that Europe is at this point still very much exposed to Russia and needs that Russian gas. On the flip side, we're also seeing that this green transition, it does take time and it takes money. At this point, we're not there yet. And if you go to the opposite extreme of all of this, and you have the Ukrainians being very concerned about the gas picture and Nord Stream 2, remember the transit fees in particular. Ukraine really depends on that outcome and those fees and those pipelines to continue to work. So they do worry that if we do see confrontation in Ukraine, the pipelines could be hit, and by that you could also see big revenue going down for Ukraine.
Okay, Bloomberg's Maria today on the ground at that meeting in Brussels. And of course, we were speaking to Bruno Le Maire, the finance minister of France, earlier, and he said, we are not going to stop our support for households and for businesses on the energy front in France any time soon. Let's bring in now Sebastian Galli, Nordea Asset Management Senior Macro Strategist. And Sebastian, just before I get to my first question to you, there is a redhead that's crossing the terminal, and I'll get your views on this shortly, but we'll start with the geopolitics. The redhead is the Bundesbank over in Germany sees the first quarter contract contraction, sees a contraction in the first quarter, pushing Germany into recession. Sebastian, I want to get your views on Germany versus France when it comes to the economic prospects of the Eurozone. But let me start with the geopolitics. Where are you looking to find shelter in an environment where there is so much uncertainty?
Well, the way normally you do it is basically go in the short end, and short end basically do relative value type of trades, such as covered bonds, which is one possibility. The second one is that the reflation trade, the idea that you buy low quality type of products, which basically are a function of the business cycle and the reopening, and you're seeing that right now in February with COVID-19 and Omicron, is also another way to do it, and that trade is doing well, and the short dated trade is also doing well. And what you have, generally speaking, is a demand for quality in a period of uncertainty. And the question, of course, becomes, when deliberately people are trying to increase that uncertainty, is how do you position yourself not only now, but in the next few months? And then eventually you go through that relief rally, which probably will take 2 to 3 months to peter out as that uncertainty filters through the system. But there's a lot of it, and there's a lot of issues with valuations, particularly in North America, which are very expensive. And so it creates a lot of jitters in the short term. Some of them are very temporary. We've seen that in emerging markets. Some of them are also temporary, and we're seeing that in Europe. In the United States, it's a much more fundamental, unstable trade that we're dealing with, as something which is deliberately very expensive, built on dreams. These dreams are not really sustainable in the long term, and they're being challenged not only by the Fed, also by uncertainty, even coming out of Ukraine. But you would ask, what is the relationship between the two? Is relatively minor.
Okay, are you seeing more of your clients at Nordea putting cash on the sidelines? And what would be the trigger, the catalyst for them to deploy that back again? Is there still buy the dip? Is that still a mentality amongst your clients?
One way that they've been doing it is reducing the duration. So instead of buying a bond which has long maturity, something which is very safe, what people have been doing over the past few months is buying these very short duration, where you have an exposure to the capability of your portfolio managers, and there it makes a huge difference. The other way they've been positioning for yourselves is relatively to quality, cheap quality things which are well managed, not in a should I say, in a fixed way, but in a flexible way, with the algorithm adapting very intelligently. This kind of stuff has been doing well. It's been attracting a lot of money, and probably will continue to attract a lot of money. So people have become more sophisticated, not only on their view on duration, their ways of exposing themselves to alpha exposure, but also their willingness to use algorithms. So flexibility, as we call it, which is another way for talking about automated trading, is actually steadily rising through the years. And this is another example of this rise.
Let me bring you back then to that line that crossed the term, and whether this is a surprise to you. The Bundesbank saying that Germany is going to go into contraction in the first quarter. We saw the services PMI coming out for the Eurozone relatively healthy and robust, and we know that the French economy is ticking along pretty nicely at this point. What is the sustainability of the economic recovery in Europe, and how that folds across to the ECB decision-making?
Well, first, it's very difficult to go against the ECB, particularly within the Bundesbank, because there's so many economists doing this. But as you pointed out, the PMIs in Germany were very healthy. They were driven by services, particularly by the reopening of the trade as the Omicron health crisis steadily ebbs, and that should quite improve. But we've seen a strong hit from different health measures, from supply chain issues, which have hit Germany, and they've dragged down a lot. January, February is probably looking good. March is looking better. So we're going in the right direction. The question is whether this matters for the ECB, and the focus of the ECB is on inflation. So is this lesser demand impacting inflation? And a lot of it is linked to the fact that there are supply constraints and they can't do very much about it. So it doesn't matter too much for inflation dynamics. The inflation dynamics are not looking particularly good in the case of the Eurozone. However, what we started to see within the PMIs is that some of the price pressure linked to the supply chain is starting to ebb, but it's not the only thing. Demand is strong, not only in the Eurozone, but also on a global basis. And that means that the ECB eventually needs to act. The only question really is how much and how fast the ECB has to act. And there's already a lot of it is priced in to the curve. I think maybe too much in the short term. In March, everybody expects its turn. We probably won't get as much as we expect.
Okay, maybe too much priced in terms of ECB rate hikes, and of course the inflation question, particularly amongst when it comes to energy, and the views from some traders like Vitol that you're going to see $100 a barrel in short order. Sebastian Galli is going to stay with us. We'll get more calls after the break. And coming up, Joost Bowman, ABN AMRO, senior fixed income strategist. Get his views on where to position within the bond market. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world. This is First New Word News, and I'm Leanne Gerrans. The Kremlin is casting doubt on earlier statements from Washington, saying there are, quote, no concrete plans yet for a summit between Presidents Biden and Putin. France also reported a deal had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it doesn't intend to invade Ukraine, but U.S. officials say they have intelligence showing that Putin has already given the order. Now, people are leaving Hong Kong in record numbers. Nearly 28,000 people left the city last week, the highest number since the Asian financial hub imposed strict quarantine measures at the start of the pandemic. That's according to government data. The recent surge in people crossing into mainland China underscores the city's fading appeal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Continues.
To the metaverse, to Spotify, to Qualcomm and beyond. They're sinking big time.
You can't do better. Bloomberg breaks the numbers first.
PepsiCo has given a sales outlook that beat estimates.
It's Peloton.
Disney and Uber.
Pfizer also out with earnings. An expert analysis you won't get anywhere else.
This is fascinating.
What is going wrong for Meta that is going right for Twitter?
How much runway is left? Peloton really becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Until the tanks are actually rolling and the planes are flying, we will use every opportunity and every minute we have to see if diplomacy can still dissuade President Putin from carrying this forward. President Biden is prepared to engage President Putin at any time, in any format, if that can help prevent a war.
Antony Blinken, the US Secretary of State, speaking on CNN. Sebastian Galli, Nordea Asset Management Senior Macro Strategist, is still with us. Sebastian, we touched on the geopolitics before the break, but let me get this question to you. The rotation from US stocks into European has been a call from a number of strategists out there. Does it still hold in light of these tensions?
I think it does. The question, of course, is there a better way to do it? And in the sense that U.S. Stocks are still very expensive, European stocks are still cheap and appealing from a cyclical point of view, but they are being hit, of course, by this conflict. Is there a better way to do it? And that means going into within the quality, within the value, within these European stocks helps you to leverage that. But you can do that also to some extent in U.S. stocks. So it's a bit more complex world than what we're used to. We're used to doing broad indices, maybe for sophisticated sectors. The reality is we move to another level of sophistication, which is what we call factors, and that is looking at the quality of companies, that is looking at these other dimensions. There are ETF and other products which exploit them, and you can do this within Europe. You can do that also within the United States, and that's probably the way to go going forward, because we're still dealing with the U.S. stock market in part, which is still very expensive, and we'll have some difficulties getting off the ground.
And the pressure on the tech sector in the US continues. It's been well documented, and there have been some calls from a number of people that we get on the show saying, look, you've got to scrutinize what's happening in the tech sector, and you can continue to find opportunities, particularly on those companies that have strong balance sheets. The profitless side, okay, maybe steer clear of that. What is your view? You've got some colorful lines on the tech sector in the US. You say it's exposed the irrational belief about the long-term future, the sell-off that we've seen there. Just unpack that for us.
Yeah, sure. If you look at the universe, there's a universe in which you deal with, in which you exist, and then there's the future. And the future is either an optimistic one, where the future is all driven by new technologies and new big tech entrepreneurs, and it's a wonderful one. But this is not the one we're going to end with. It's more complicated than this one. Is, for example, the green transitions, less disposable income, more pressure to become more productive. A lot of the gains that we're doing is by displacing services which are inefficient and becoming more inefficient, more innovative within them, and that means more pressure on part of the population. So if we are focused really on the big tech, yes, it's a dream. Some of these dreams make sense, and there's where you focus on quality, because these are the people who have actually achieved something and are delivering earnings, such as Apple, and you say this is a great company, and the answer is it is an absolutely great company. The question is, do you want to buy it? And there the answer is a bit more ambivalent, because it depends on belief. And the question is our belief in that future stable or unstable? And as you can see, monetary policy is becoming tighter, but even when it gets tight at, let's say, 2 to 2.5%, these are still very low interest rates. That means the ability to sustain a story, a fairy tale story such as Apple, is actually pretty good. So, of course, there's discrimination as everything plastered out from Peloton, Meta, and the likes, and there's a lot of discrimination between these stocks. Some of them are value, but you should be aware that you're buying a dream which is not sustainable, but it is quite sustainable. It just isn't real. So over time, as earnings are delivered and don't exactly match expectations, you might have some difficulties, but it's clear that there are some places such as Apple where you always want to be, because Apple is probably going to be there in 50 years.
Okay, there's the argument for many as well that real rates remain negative in many parts of the world, that earnings have tended to surprise to the upside. The earnings season has been relatively solid, and that proves supportive for equities, and arguably there's an opportunity to buy the dip.
There is one, for example, in the likes of Apple and the likes of quality, particularly in the likes of climate change. So if you can imagine that what we need is a transformation fundamentally of the way we produce energies and many things in the next 20 to 30 years, they will be there within the tech sector, within these changes of a mutation of the economy. And that means they'll be there not only within the big names that you know, as they will evolve in their palette of businesses, but also in smaller companies, unicorns, some of them which got dusted and busted. Well, some of them will actually do extremely well in the next and coming decade. So a lot of analysis by you as you read through your earnings through the analysis of these different companies, but also by portfolio managers and analysts. It's a great environment for an analyst.
Is this a year of finding alpha?
We always try to find alpha, and the question is whether it's beta or is it alpha. And alpha is really what happens when you come under stress and there's dispersion. It's your ability to find within this dispersion the value that is inherent in these stocks, and this is where most of the time we see our portfolio managers shine.
Okay, you've talked about belief around the US tech sector. Let's move from the US tech to the Chinese tech sector. More pressure on that area just in the last few days. We've seen that in Meituan, we've seen that in Alibaba, and the news around Ant Financial and concerns about banking sector exposure to that part of the Alibaba universe. But you still see opportunities. You say that Chinese tech is looking attractive.
Yes, it is. If you have to imagine what will happen over time is, of course, they're being cut down to pieces because there's a perception that they have become too important and too strategic within the Chinese economy, and they don't exactly fit the narrative that is given by the governments, and they have to learn to operate within this narrative. Well, as they learn to operate within this narrative, they will mutate and change and basically be stakeholders in new companies and change their way that they're doing, and that means that eventually they're going to do very well. And one of the reasons they will do very well is because they're national champions. China is a competitive economy to some extent, but it's mostly an economy of national champions. The US has BlackRock, for example. It has Apple, and China has several of these champions, and it likes them. So for sure, it's cutting them down for now. But if you imagine 5, 10, 15, 20 years, will they still be there and be as important, even more important than they were before? And the answer is most likely yes, but in a different fashion.
Okay, looking at those national champions in China and how they may evolve on the back of this regulatory challenge from the authorities there. Thank you for those insights and for joining us. Sebastian Galli, Nordea Asset Management Senior Macro Strategist. Let's check in on these markets then. You're still low across the European benchmark by close to 0.5%. The geopolitics still front and center. The Kremlin saying there are no concrete plans yet for this meeting between Presidents Vladimir Putin and Joe Biden. Maria today on the ground in Brussels keeping us up to speed and saying, look, it could still happen. They're going to have to discuss it between the foreign ministers. Your dollar is also low by 0.2%. And futures stateside on a day when the markets there are closed, currently range bound, though the Nasdaq is lower by 0.2% when it comes to those futures. Coming up, Justus Bowman, ABN AMRO, Senior Fixed Income Strategist. We'll get some calls from Justus. Stay with us. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back. This is Bloomberg Markets. I'm Tom McKenzie. Just a line crossing to bring to your attention. Hong Kong will mobilize police for COVID-19 mass testing. That's according to the South China Morning Post, that Hong Kong newspaper. We know that the chief executive of Hong Kong, Carrie Lam, has said that she does plan to mass test that entire city as it faces, and in fact, it's China's worst outbreak, even worse than Wuhan, and they do plan to mass test a population of almost 7.5 million people in the city of Hong Kong. Okay, let's get back to the markets then. European stocks turn lower as traders question the prospects for a diplomatic meeting between President Joe Biden and his Russian counterpart, Vladimir Putin. Let's get to today's market moves then with Bloomberg's Christine Aquino. Christine, it's so difficult to pass the geopolitics. One moment we're hearing that there's going to be a meeting, the next moment the Kremlin comes out, appears to pour cold water on it. Maria Tadeo has been pointing out to us on the ground in Brussels that, look, you have to get the foreign ministers together first. That's going to happen on Thursday. They will probably lay the groundwork. But the markets are whipsawing around this.
Absolutely, Tom. And this really just shows the difficulty of pricing something like this, which is playing out in real time, right? I mean, on a normal day, geopolitics are difficult for markets to price, and especially when we're seeing a situation like this, which is changing seemingly by the minute. And so I think what we're really seeing in terms of market moves is a lot of kind of intraday volatility and a lot of kind of whipsawing, as you mentioned, but not a lot of longevity in terms of the potential trends that investors can really latch onto.
And it's taken the focus away, at least to some extent, from the central banks, although that's always there in the background. And JP Morgan coming out with this bold call that you're going to get 9 consecutive hikes from the Fed, 25 basis points a time, taking us through into 2023. Where are we in assessing the rate of hikes and how the geopolitics folds in to the Fed's decision-making?
Yeah, it's certainly very much playing into an already muddy picture for rates markets. I mean, JP Morgan definitely a lot more punchy than what we're seeing is priced in the markets, which is about 6 Fed rate hikes this year. And so they're definitely kind of getting out there with a call of doing more. And that very much gels with this idea that the Fed is potentially behind the curve in inflation. They're going to have to catch up and deliver a lot of rate hikes. But I know that there's certainly less focus now in terms of this idea of a supersized rate hike in March. And I think that is a lot to do with the fact that we are seeing these geopolitical tensions that are playing out. I think the way that markets are looking at this is it doesn't necessarily reverse the direction of yields or, for instance, equity markets that we've seen in the last couple of weeks, but it has certainly slowed that move higher. Yeah.
In any normal week, would also be focused squarely on what's happening in China. Genro, a developer there, okay, it's not in the top 30, but it's defaulted, and it's just reminded us of the risk around the property sector in China. And then you've got this continued crackdown in technology and a raft of measures and a raft of announcements just over the last few days. Where do we stand on this? And are we and our markets accurately pricing the risks? Let's start with technology in China.
Yeah, well, technology definitely something that are catching investors' eye at the moment. And I think that really drives home the point that technology as a sector globally is really all about divergence now, you know. Long gone are the days when technology is being treated as a homogenous trade hire, especially during the pandemic years when there's a lot of support from central banks. And so, you know, it is quite a nice environment for growth stocks, particularly technology. But this year, I think we really have seen that divergence. And, you know, it's not just about, oh, if we see some positive news out of big tech in the US, then it's an automatic positive for Chinese stocks as well, or for Chinese technology stocks as well. No longer, you know, I think it really is going to be all about idiosyncratic stories, and certainly what's going on in China, definitely catching investors' eye and being treated.
Those links have been broken, arguably. Christina Kino, always great analysis on the key themes driving these markets. Thank you. Let's get to our next guest then, Joost Bowman, ABN AMRO Senior Fixed Income Strategy. And Joost, we have to start with the geopolitics before we get on to the Fed. How are you thinking about the to and fro between Washington and Moscow on the plight of Ukraine, and how this reads into markets?
Yeah, of course, it's one of the dark clouds that has been added to the hanging above financial markets, and it's very difficult, of course, to say how this will play out. I'm not a geopolitical expert, so it's going back and forth, but definitely what it causes, and I think that is, of course, the key for investors, is that it creates a lot of uncertainty on top of the uncertainty that central banks are already creating. So that is not good news for markets. And yeah, given how big the issue is, it's unlikely that these worries will go away quite soon. So I think we also have to put the geopolitical worries in the basket for this year as a headwind for financial markets.
And at 192, 193 or so for the US 10-year, does it still have that safe haven status, particularly from investors, for example, from Japan, if these geopolitics continue to deteriorate?
Well, you clearly see that of course, U.S. treasuries, Japanese treasuries, and of course also bonds are typically safe haven assets. And in Europe, you also clearly have seen that on the back of the rising tensions in Ukraine, 10-year bonds have performed quite significantly. So yes, they still continue to be the safe haven paper in the world.
Can we look through yield curve flattening in the US, or is it pointing us to what many, or at least some, are suggesting is potentially a hard landing for the US economy, and even some within the markets predicting rate cuts come 2024?
That's quite interestingly. I just heard the story about JP Morgan. We at ABN AMRO, we have penciled in actually 10 rate hikes of the Fed. Not in a straight line, but taking the Fed funds rate to 2.5% by 24-25. And of course, the risks are that the rate hikes will indeed be a straight line, as it's very clear that the US Fed is facing an inflation problem here. So I think that is a real difference compared to the past, where central banks were hiking rates because to cool down the economy, in preventing inflation from rising. Currently, the situation is completely different. Inflation is spiking, so the Fed is basically back a bit like what we saw in the oil crisis. They really need to tighten policy to get inflation under control, and that against the background of an economy that is actually already operating almost at full capacity. If you look, if I may, some examples. If you look at the basket of items in the PCE inflation basket, which are rising by more than 5%, that is the majority of items is currently rising at a very fast pace. So that shows that inflation is really a broad theme in the US, and clearly also triggered by demand from consumers, as they benefit at the moment of more than 6% wage growth on a quarterly basis. So that is making the Fed very worried about inflation, and they will take some collateral damage in its stride, I would say, if they start hiking it, and if that has negative consequences for the global economy.
Just what holds them? Why 10? Why do they do 10 hikes over an elongated amount of time, spread them out over a long period of time? Why not go hard and fast, do 50 basis points in March, and front load them?
Yeah, good question. Well, go hard and fast. They always, they've never, not never, but in the recent past, the recent decade when they started hiking, they've never done it with big steps. So we still expect them to follow the path that they had been following in the past. Maybe 2 big steps that can have more collateral damage, of course. So by doing smaller steps that can, of course, prepare markets as well, that they start pricing in and that the negative impact can be different. Why 10 rate hikes? That's actually quite a bit relating to what you said earlier in the program, was that real rates are likely to remain negative. Well, if you want to fight inflation, real rates need to become positive. So the Fed needs to hike, at least in our view, to 2.5%, because at that time, so in say 1.5, 2 years time, then inflation is likely to be lower, and then you have positive real rates, which is needed to get inflation under control.
Okay, and that takes us from the Fed to the ECB, and some mixed messages, arguably, from members of the European Central Bank. We've done some reporting on this, suggesting that come September, that's when the asset purchases end. You could be looking at a rate hike in December. Does that align with your views?
Yeah, it aligns a bit with our views, although we are a bit more dovish about the ECB, to be honest, than markets are currently pricing in. We do expect the asset purchases to end by September, and we see a first but only 10 basis points rate hike in December, followed by another 10 basis points hike in Q1 23. However, the big question will be not whether the ECB will hike more, but whether the ECB will hike in any case, because if we are in December, then it will face a backdrop of inflation already coming down significantly, economic growth slowing as households' purchasing power, of course, has been hit by higher energy bills. Then global financial conditions will be tighter, also given the actions by the Fed. So the backdrop of starting to hike rates is actually not great for the ECB, and we actually wonder, and we think it will be a close call, whether they will hike at all.
Okay. Used a close call then from the ECB as to whether they even hike. Oh, interesting. Where does that leave you? If you take all of these factors into account then, in terms of where you want to be positioned within fixed income, what are some of the key trades for you at this point?
Now, at the moment, it's very clear that the volatility that we are seeing is unlikely to go away anytime soon. So markets are very nervous, and that will lead to wider spreads. Also, if you look more from a cross-asset point of view, the tightening of monetary policy will lead to higher rates. That will lead to kind of discounting of equity valuations. That in itself will filter through to say the corporate space, where we expect significant widening in spreads. Also, the bank debt market has been hit already with, for instance, AT1 paper in euros already 60 basis points wider than at the start of the year. So it's clear that the risk-off sentiment in financial markets is taking its toll. So the best way to position now is to really be underweight risk and also underweight duration. And that's also what the investors that we speak to indicate.
Okay, Just Bowman, ABN AMRO, senior fixed income strategist. The views there on further yield spread widening. Take cash off the table and be cautious within these volatile markets. Thank you for those insights. Coming up, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. We'll be getting the latest on where we stand then with COVID-19, Omicron, and countries like the UK scrapping all of their restrictions. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Now here in England, Boris Johnson still intends to end remaining COVID restrictions. The Prime Minister said it was time to cease state mandates, pledging to lay out a plan this week for living with COVID. That is despite opposition from some public health experts as the UK continues to see tens of thousands of infections a day. Johnson's comments came hours before the Queen tested positive for a mild case of COVID-19. Now, Deutsche Bank is warning its employees not to delete WhatsApp messages from their phones. It is part of efforts by the German lender to clamp down on private communication channels amid a US crackdown. In December, US authorities imposed $200 million in fines on JP Morgan Chase for staff's use of WhatsApp and other private email accounts. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
From New York City. We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Well, it's huge for Australia. 660,000 people employed in our tourism industry. Obviously, it's been a very difficult 2 years, but it's party central out here at Sydney Airport as we've reopened fully to the rest of the world. And it's great news, and it's great to see the excitement. And I think it all goes well for our tourism industry, rebounding very, very strongly.
Dan Tehan, the Australian Minister for Trade, Tourism and Investment, I don't know if you noticed, but he had the Tim Tams in one hand with the Vegemite and the koala in the other. So there you go. If that doesn't pull you to Australia, I don't know what will. They've opened their borders now to the vaccinated. OK, joining us now is Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. Joshua, we're seeing a differentiating approach from regulators and officials and governments around the world when it comes to where we are with this disease, with the virus. Here in the UK, we're waiting for the Prime Minister, Boris Johnson, to announce that we're going to be scrapping essentially all measures. In Hong Kong, a very different approach, of course. They're wrestling with the worst outbreak that China has faced, worse even than Wuhan, and the need to mass test that city has been the decision by officials there. Where do we stand in tackling COVID-19, and how much division is there?
Well, it is different. It's different in different parts of the country. Here in the United States, it's different in different parts of the world. What's different is the state of the pandemic, as well as the way that leaders and societies want to go about fighting it. So we're seeing, as things are generally getting better in many places, different strategies that are being approached. I think some things may be premature, while we still have record numbers, very high, I shouldn't say record, but very high numbers of hospitalizations here in the United States. Just sort of throwing caution to the wind doesn't make sense to me. In the UK, saying, isolation isn't that important is a little confusing, because I think, we want to limit the number of infections reasonably, and keeping people home who are sick, that's generally a good practice. So I hope that as things are getting easier, we're looking for what is reasonable to do, not like, how can we put this behind us as quick as possible?
How much resiliency has been built up within the healthcare system there in the US?
Well, I think the healthcare system is a little bit on the ropes. The doctors are exhausted. The nurses are exhausted. Many of them have left the profession. We're seeing just a lot of frustration, because when the ICU has been full and people are wanting to pretend that, COVID doesn't exist, that's been enormously difficult for people. So I think, there are obviously many healthcare heroes. The healthcare system has really stood up to every challenge, but it's come at a cost. I think there's a lot of work to do now on COVID, even as the restrictions are getting lifted. We have to, do much better with linking testing to treatment as these new treatments come online. We have to fight COVID misinformation, like around vaccines. Like, if we do more now, we're going to be in a better position later in those regards.
So it's that multi-pronged effort, and you talk about the treatments, and one of the pills available is the Pfizer pill. I know that it's a question of supplying it, getting out into the market, getting into hospitals and to healthcare providers. Where do we stand in terms of those treatments? When are they going to be readily available?
I don't have a great sense of the supply. I guess I'm hearing, in a few months perhaps, but I think that there's a lot of work to do between now and then. The vaccine effort in the United States has done a pretty good job getting to communities that are kind of shut out of the healthcare system, or more or less left out of the healthcare system. I was out vaccinating in South Baltimore over the weekend with the city health department, and it's right outside a supermarket. But if somebody, is sick, particularly without a doctor of their own, what do? How do they get that treatment within the first 5 days? That's a really important question for people to be grappling with. Otherwise, we're going to have the same disparities, the same, high levels of severe illness in communities that have been hit the hardest. So I think this is, a moment, while we're not totally frantic over the number of cases and hospitalizations, to be building our resiliency, like you said, for what's coming next.
And that time frame, as you say, 5 days, crucial for that treatment, and so how you get access to that. When it comes to Omicron and your views, the data that we're seeing, the studies that have been done, and as to whether or not this is the variant that essentially calls time on COVID-19, do we have any more clarity on that? And what are the other variants telling us about the dangers that continue to lurk?
Well, we already see that there's another variant of Omicron that, can spread within Omicron. So I think that we have to assume that, first of all, Omicron will be likely around for a while, or if not, something's going to come and take its place. We don't know how long the immunity, to Omicron lasts, particularly after an infection. So there are a lot of questions. I think there is every reason for us to be working to strengthen our COVID defenses. And while we're doing that, we can do more on influenza. We can come up with ways to get people influenza treatments faster. And we can help people with sick leave, for example, stay home from influenza. And so hopefully in the end, we're stronger and healthier, or at least we're doing better than we have in recent years.
Okay, and before I let you go, we talked about the disparity, or at least the divergence, the disparity, I should say, in terms of how different nations are dealing with this. And certainly many nations on the continent of Africa have got very low vaccination rates. Where are we in being able to vaccinate developed nations?
That's got to be a huge priority. I mean, and there are a couple different aspects. It's both vaccinating, getting vaccine there. It's helping with the distribution. It's countering misinformation. And ultimately, it's giving them the ability to make vaccine against COVID, this variant, other variants, or other diseases, so that there's just a lot more resilience and self-sufficiency in those countries. And I think that should be a real focus of developed countries, helping, with intellectual property and other restrictions that are keeping countries from being able to do a lot more themselves.
Okay, Joshua Sharfstein, we appreciate it, of Johns Hopkins, of course, for those insights on where we stand with this virus and the continuing work that needs to be done and put to play. Okay, let's check in on the markets then. Sharply lower across the benchmark European stock 600 by 0.7%. Certainly feeling the pain in France, down more than 1%. The CAC 100 and the FTSE MIB in Italy as well is lower by more than 1%. The FTSE 100 have been the one major index here that had continued to be in the green. That is now down 0.2%. And futures stateside on President's Day, when the markets are closed, when they reopen, you're looking to losses of around 0.3% for the S&P E-minis. The Nasdaq futures are looking at losses of 0.6%. Your Bloomberg dollar index is lower by 0.2%. The US 10-year not trading today, last closed at 192. Crude WTI 91, up 0.7%. Coming up, we're going to be speaking to James Athey, Aberdeen Investment Director. We'll be talking, of course, about the central banks, the geopolitics, inflation, where James thinks we should be positioning amid these turbulent and volatile times. There is plenty more coming up. Stay with us. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed